Morning all, how are we doing? Hello everybody. Morning, Danny, Christian, Martin, Nicholas, Peter, Burke, Pip, JC, Ladder, Baggy, how are we doing? Morgan Doug, Jerry, Emac, Virginia, how are we doing? Another Thursday, exciting. Haven't looked at anything yet because I've literally just got in from the gym. So let's have a look at where we are. There's a chart. I'm not with it at all this morning. Let's start off with the news. I'll go through everything in a minute. I've just realised I just banked something, and I was just watching this Aussie dollar yen. Let's see where we are. Back. Just going to close that Aussie dollar yen. We're we're just pulling back. We've double topped to the pip, previous day's high. I'm still not sure about this yen. I think it might have a little bit more strength left in it after what we had experienced with the US dollar off the CPI figures yesterday. So probably better just to get in and out and done with that one rather than try and eke it out to the propulsion gap. Rather have it in the bank. Can deal with it later then. Right, news-wise, let's have a look at what we've got today. So we've just had the GDP for the pound this morning, which came out as a negative 0.1, which is better than expected. We're expecting a negative 0.3. This is still recessionary. Obviously, anything less than 1 on a GDP or less than 0 on a GDP is a recession, contraction of the economy. So, yeah, basically, it's good, but still not great. So nothing particularly exciting there. I'm not quite sure if the pound has reacted to it this morning. Yeah, negative. Yeah, a bit of a negative reaction to that this morning from there. I had a pound odd on, didn't I? Oh, I'm out. Okay. Pound odd I've got out of this morning as well. I stuck a trailer on that before I went to the gym this morning, which it's just spiked up and taken me out literally to the pip and then dropped. Look at that. Oh, couldn't get much worse than that, could you? Look at my exit. Look at the wick. Literally took me out, spread, took me out, and then collapsed. Typical. So target on this was... Oh, actually, target was below. So, yeah, I was nowhere near target. Target was down here somewhere. ADR. Anyway. So, yeah, out of pound odd. So, yeah, pound's coming down off the news. The rest of the day, we've got the PPI figures at 1:30 this afternoon with the unemployment claims. The unemployment claims is kind of the important part there because that gives us an idea of what the unemployment rate will be. That gives us an idea of whether or not they've got more leeway to increase or decrease interest rates, which is the main driver. So it's bank holiday in New Zealand today, apparently, or tomorrow, depending on which way that's going. We've got Wallace speaking later. So, yeah, 1:30 is news this afternoon. Overnight news, not a lot. I was just scrolling back to yesterday, end of session, just to see what's happened overnight. Looking for any Japanese news. Nothing there. Korea, China, exports. There's the GDP. Manufacturing's better than expected. Expecting to ease recession on a 3-month forecast. Year on year, better than expected. Okay, so no news really there overnight either. So that's weird. By the way, the buyer scorecard is back up and running. The sentiment is back up and running. It's all back up on the website now. Right, so there we go. So that's overnight news. So far this morning, have just banked pound odd, closed that out. So that was 2 positions there. So 1 entry there, scale out, 2nd entry, took a 3rd entry there, but got out of that one. So I would have been out of it sort of down here, but because I took that one off, I had to get out of it down there, but that's fine. So propulsion gaps are filled. We've still got this propulsion gap downside, which I think is probably going to get hit. So if you're still in it, I'll probably hold it. Watch this low though. Pound New Zealand, ADR. Check that out for an out too soon. I was happy with that. Potential resistance bounce, support bounce, but yeah. So check that out. Look at this range. Yeah. Literally done the 3/4 of the entire range yesterday in a day and then finishing it off today. That's a huge drop. Huge drop. Big New Zealand strength with pound weakness at the same time. Pound Swiss, 125 ADR. God, market's going to open in a minute. It's going to be a busy morning, I think. So yeah, big move down on the pound New Zealand there. So I've banked pound odd. I have banked Aussie dollar yen in out. That's running again now. New Zealand dollar yen also banked that one this morning. So that hit my TP. My TP was on this propulsion gap there, which is that support. So that's a propulsion gap. That was my TP. Euro CAD. Yesterday, that was a bit of drawdown control. So yeah, that's this morning's banks, basically. So bank 0.75. Took 1% drawdown yesterday on the news. Obviously, news spike. Took a bit of DD, but there's nothing particularly worrying in there at the moment. All pretty much new positions. US dollar yen, obviously the US dollar is the main issue at the minute. Oh, damn, I didn't manage to get out of that second entry. I took an accidental entry yesterday on this US dollar yen. I got in, and then the EA got me in as well. So which one was the EA? Sorry, let me just actually, let's go and look at the DAX quickly. DAX is about to open in 20 seconds, so let's quickly look at that first. I'll deal with that later. So DAX, we've got a gap fill to the downside. Quick gap fill today. We're very close to yesterday's high as well. So upside, we've got resistance. Downside, we've got support. Very, very close to where we are. So might be a bit of a whippy one today. Gone short very quick break there. Blimey. Didn't get that on. Pre-markets. Yeah, pre-markets all under the minimum range today for me. Prime example of this new strategy that I'm developing on the DAX to analyze the best ranges to trade at the open. Not always right, look. See? Statistically, a range of that size compared to its average daily range doesn't work very well. However, some days it is just going to go and it's not going to care and it's going to make a fortune and nothing you can do about it. It's a complete flip of a coin. That's the beauty of the opening range breakout strategy. Doesn't matter which way it goes, does it? So push down into the pre-market lows. So I'll analyze basically the 5-minute OR, and then we'll see if we trade that this morning. So yeah, so your downside gap fill virtually complete, depending on whether you decide to take the actual close or around about the close, but that's pretty much done. So upside targets today, we've got this high. So we looked at this one yesterday as potential direction for today. So we were talking about the gap fills and how we've been playing gap fills, and the gaps always get filled. That's basically what gaps do. They get filled all the time. And we were talking about this entry down here yesterday with a push back up. And then we had that gap fill play. We were playing that gap there. We were playing this gap here. So all gaps are now done. Yeah. Gap fill complete. Yeah. Gap fill complete. So we have got no gaps to the downside now. The market is completely efficient. There's no unfinished business everywhere. and we're where we are. We are where we are, basically. So decisions need to be made now as to whether we think we're in a bull market or a bear market. So the market structure is currently bearish. And if that is the case, and we're going to continue in a bearish market structure, this is your new lower high. So we want to be looking for long-term shorts, basically, with a view to come down and put in a new lower low. Obviously, the market has been recovering on the DAX. So you could look at this in the opposite direction and go, this is a bull market now. We've pulled back into the 2472 zone, which is where we tend to bounce in a bull market. Yeah. Difference between analyzing different timeframes and why it's so important to stick to a time frame. Your bias, if you're an hourly trader, is bearish. Your bias, if you are a 4-hour or a daily trader, is bullish. Yeah, totally different. Analysis by paralysis. We were talking about this in the Telegram group the other day. You know, if you keep flicking between time frames, somebody was saying we just had a reverse alert on the 4-hour that's told us to do one thing. We've had a reverse alert on the hourly told us to do something else. Pick one. You are going to get completely compromising signals that you're going to tell you to do different things on different time frames. That's why they're different time frames. So you need to decide which way you think this is going from here. So personally, I'm not convinced about this bull market yet. When you look at things like the Dow, yeah, we're struggling. We're struggling to make new highs. Yeah, this Dow is not able. And again, we're up at the highs on the Dow. This is not a bull market. This is a range. This is confusion. This is the market not really knowing what the hell it's doing now. So same with the DAX. We are rallying, but look at the rollover. Potentially. Slowing. So we'll see what happens today, but difficult one. So momentum at the moment is short. There's your 5-minute range. Bit big today. Might struggle to get on that today, I think, but we'll see. But if you took the 5-minute pre-market open, well done. Especially if you took the 5, you are quids in today. So there's your 15-minute pre-market. You got 2R out of it. If you took the 5, you got 4R. And obviously you're still in it if you are taking the runner. Right, there's your 5-minute opening range. So going to take a break of that 5-minute opening range this morning and see if we go, we'll see where we go basically. So upside, if we break to the upside, we need to be watching this area here, which is yesterday's high, for a potential double top bounce. If we break to the downside, as we've just seen, sky's the limit. Well, floor's the limit. The downside, there is just an unlimited amount of space if we are going to continue in this bear run. So obvious spots to the downside if we are going to run to the downside. I mean, there's nothing really obvious to me there. That wick is kind of a double top-ish area, 125 ADR. That's about it. I can't really see anything obvious there to the downside that would act as a solid support. So we'll see. So there's the DAX. Morning from Pontevedra. I'm never going to get that right. Morning, Mimpo. Morning, Astro. Morning, Amy. Morning, Steve. Ladder. 15-minute break. Even stopped. 15-minute break. Even stopped. Oh, you got 15. You got break even on 15-minute pre-market 15. Yeah, cool. Morning, Andres. Right. So we'll see where that goes this morning. I mean, if you look at it realistically on the 5-minute chart here, if it does break to the downside, somewhere around ADR, probably. That high there. There's nothing. That high there and that low, basically, I think is probably the most reactive area there. It's anywhere in that accumulation. This is what I mean. This is the confusing part when you're trying to look for support resistance zones. There's nothing there, is there? So it's basically, if it breaks short, hold on tight and hope it gets to your target, really. We'll see where that goes. Right, let's have a quick look at the rest of the market. Morning, Gray. Could you have a look at UC? Dollar CAD. So that's coming down at the minute. So basically yesterday, excuse me. Trouble going to the gym in the morning. My energy's all gone now. So yesterday, obviously, we had the all the rates for the CAD and New Zealand dollar, and obviously the CPI figures for the US. So the market had a very strong negative reaction off of the CPI figures. They were marginal misses, like 0.1s, basically. So it's not, I don't think it's that bad. The market certainly did react negatively to it. I've been saying for the last few months, haven't I, in here, every single positive news event we get gives you that sort of result. Every negative news does that to the dollar. They're looking for any excuse possible to sell the crap out of the dollar, and we got it yesterday. So it was a big reaction, but that doesn't mean it's necessarily bearish. It does take a little bit more pressure off of the possibility of rising interest rates again. They've said they are going to do it. They need to do it. Except what we might find now is maybe a raise, a pause, and a raise rather than a raise and a raise, which makes it sort of shorter term a little bit more bearish to the dollar. The Canadians got their interest rate rise. No massive reaction to the CAD, and same with the New Zealand dollar. New Zealand dollar had a rally off of it yesterday as well. So it's it's very difficult to tell what's going on with anything at the minute because the market's in a state of confusion. I was talking to a family member about it. We've never been in this situation before. It's like, what do we do with money at the moment? Where do we put it? Do we put it in the stock market? Do we put it into savings? Do we put it into this, that, the other? Don't know. We've never come out the back of a pandemic straight into a potential war in Europe. We've never had the banks and central governments having to bail out every country in the world as much. We've never had interest rises happening this fast. We've never had inflation climb this fast. All these scenarios we've never experienced before. Market hasn't experienced it, therefore the market doesn't know what to do with it either. So you can only do what you think is potentially going to happen. And this is why we pay attention all the time to the press conferences. They're the most important thing because the central bank governors give us guidance as to what they think they are going to be doing over the next few months. And that's what the banks and the traders are looking for. It's like, where is it going to go? Because we don't know. So you get this massive drop, which is the bank's reaction to the normal reaction to negative inflation. But then you look at it long term and you think, well, is it? Is it something that bad? And you tend to find it kind of recovers. And this is what we had with the New Zealand dollar, Aussie dollar CAD, ADR. Have a look at that in a sec. ADR hit there. So when you look at the Aussie dollar, New Zealand dollar and that massive spike we had, this is not the normal reaction to a New Zealand dollar as expected interest rate rise. That was a massive, massive overreaction because they got it wrong. They're getting it wrong a lot at the moment. So you can't necessarily say because we've had what we expected on the New Zealand dollar yesterday, that should be bullish New Zealand dollar, or rather that way. Because it's not, stuff is not doing what it normally does on fundamentals. So yesterday we had massive news for the US dollar, massive news for the Canadian dollar. Strong for the Canadian dollar, which would be negative US CAD, negative US, which is negative US CAD. So that's a double negative. So we got obviously a big drop down, 50% retracement, and it looks like it's coming down this morning. So this is what I would class as a natural reaction to a negative news and a positive news for the CAD, which gives you a negative bias, US CAD. So you have to say at the moment, fundamentally, it's a short. Whether or not it goes short, I don't know. So you've got support coming up at the moment. And if the market has any kind of doubt, what it will do is nothing. And if that's going to be the case, you'll find you get a support bounce because they will want to just hold it in equilibrium or hold it in balance, as they call it, until they actually know what they're going to do. So buyer scorecards are still the same. Look, from a fundamental perspective, the vast majority of currencies out there should be range bound because there is no fundamental advantage in any direction. The US dollar CAD at the moment is a +2 range bound. So COT, i.e. the futures market, is ever so slightly long, more long on the US dollar than they are on the Canadian dollar. The entire retail market is longing it, which means you want to be shorting it. So, there's just conflict everywhere, confusion. So difficult. But what we do know is when the market gets stretched in one direction, it tends to ping back the other way. And that's not going to change. So just keep doing what you're doing. Bias-wise on it, I'd be looking for longs. Oil yesterday, off the back of the inventories yesterday, had a very marginal reaction. That's the oil inventories coming out yesterday. Didn't go anywhere. But look at oil, gradually creeping up. But where are we going to? The top of the range that we've been stuck in since April. For 2 months. 2 months. Yeah. Get to the top of the range, you want to be selling it. If that's going to come down, that's going to weaken the Canadian dollar. So it might have had bullish news yesterday, but if oil starts coming down, that's going to be bearish CAD. So all you need is a tiny little bit of good news on the US dollar. And US dollar CAD is going to go back completely the opposite direction to what it did yesterday, isn't it? So very difficult. Everything is fundamentally very difficult to sort of analyze at the moment. We're in a slight downtrend. But I've got buys on at the minute because we had an RSI extension yesterday rather. So got a long on, got a second long on. We'll take another long at support, which is coming up at just over 100 ADR today. New Zealand dollar, US dollar. So New Zealand dollar and the Australian dollar on the march this morning. Yeah, so we just looked at it, haven't we? The New Zealand dollar, look. So we got the 5.5 basically in May. Yeah, which is what we were expecting. We've had the 5.5 today, which is what we're expecting. And yet in May, the New Zealand dollar collapsed when we got there. Now, we got exactly the same result as we did in May, and the New Zealand dollar is rallying. Doesn't make sense, does it? Fundamentals at the moment just aren't making sense because we are so close to those terminal rates, or what we expect to be those terminal rates. Market doesn't know whether it should be buying or selling anything. Doesn't have a clue because the market is reacting to figures, to numbers all the time. We can't forecast what the numbers are going to be because the numbers are all at this point where we would expect them to come down. It's like an oscillator. Inflation and interest rates are like oscillators. They go like that. At the moment, inflation's up here, expecting it to topple over. Interest rates are up here, expecting it to topple over. And what we keep seeming to getting is something like that. So how can the market possibly say, right, now we need to come down? Because every time we think it needs to come down, it doesn't. Like the 8.7 we just got on the pound off the interest rate off of inflation. Yeah, that should have come down. We were expecting it to come down. The market was expecting it to come down. It didn't move. Yeah. So everything's like really big at the minute and stuck. So I think we're going to get some real fast movements at some point when we see these inflation figures start to come down. The first time we get an interest rate freeze for an entire quarter, I think that's the indication when the market will be able to turn around and actually know what's going to happen next. Because if we can freeze interest rates for 3 months on the trot, we know that we've then got the opportunity to start to drop them. So tricky. Everything's tricky. But as long as there's buyers and as long as there's sellers and as long as there's banks that want to take profit, relative strength will still work. So just keep focusing on that. So obviously US dollar CAD is along at the minute. We've got a few ADRs to look at. The weekly ranges are all off the scale at the moment, obviously, because we've had some massive news and some massive movement. So we'll have a look at all those in a sec as well. Euro US dollar, we'll have a look at that. And let's just quickly look at the DAX. Whipsaw on the DAX. So triggered long on the DAX. This might be a hedge today, I think. Not going anywhere really, is it? So we have triggered long. Not the best, I don't think, with what we've got there. But we'll see. If it goes short and we can get a decent run short today down to ADR, it'll be a profitable trade. So let's see where we go. Euro US dollar short on that at the moment off of the RSI extension. Obviously, yesterday we had the US dollar weakness, so it's had another rally up. Euro is a long, should be a long. Lagarde has been very, very quiet of late, and we've got no Euro news coming up for a couple of weeks until the PMIs. So there's no real reason for the Euro to rally at the minute because there's no news, no catalyst to drive it. So we're waiting basically for the next US dollar news this afternoon. If that comes out bullish, we'll be back down here. So I would expect that propulsion gap to get tested at the very least, if not obviously all the way back down to there. There's potential obviously for some positive US dollar news. So the Fed were very tight-lipped yesterday as well about what's going to go on after the CPI. We didn't get a lot of information out of the Fed. So find where it was. So yeah, there's your CPI release. Fed swaps price in lower odds of second rate hike this year. So we've been not promised, but it's been pointed to the fact that we've got 2 more rate increases to go on the US dollar. So we're 5.25. So we're looking at 5.75 as the minimal terminal rate. So we didn't really get a lot out of the Fed after that to say anything positive or negative about it. So it's only going to take one comment from someone in the Fed to say, we will still be doing interest rate rises this year. There will still be 2 by November or whatever, which is what they forecast before, and we'll get a bit of a rally off the US. So this could come down very, very quick and easy. But look at where we are on the hourly RSI, that extension. We don't often get extended to those sorts of levels. Yeah, we're above the 80. So this is coming down. That's what I said. That's where I would expect them to test. There is a potential for them to just test the monthly high. Could happen. But then you're going to leave that propulsion gap, that propulsion gap, that propulsion gap, that propulsion gap in play. Unlikely they're going to leave all that unfinished business. So we'll be back down there somewhere. So I only got 3 on it at the moment anyway. DAX is going nowhere. So let's look at the ADRs so far today. So Aussie dollar CAD. Big extension to the upside. Initial entry on that. Target 150 ADR. Top of that propulsion gap. So first entry on that literally has just gone in. M5 reverse alert. So drop down. There's your reverse alert. Literally just gone in while I've been talking. There's the first entry. So ADR hit. Be looking for coming back down to the propulsion there off the back of the Canadian dollar interest rate. So there you go. If it does push up, obviously, into propulsion and retest all this slot, fine. So whenever you've got something like this, obviously, when you're so close to the propulsion gaps, it kind of makes sense to go and do that and then come back down and sort that out at a later date. But they will also come down and sort that out and then push back up there because obviously that's how market structure works in legs. So we'll see. But yeah, got short on that one. 150 target, so 84 pips roughly, which is 1.5 ADR, something to the downside. Euro New Zealand. So that's nicely extended to the downside. New Zealand dollar at the moment rallying hard off the back of its rates. That propulsion gap is getting filled. That's kind of done. That's a monthly low. So yeah, once this is filled, I was expected to push back up into there somewhere. So not quite extended yet on RSI. So there's no entry for me on this one just at the moment. but that is an ADR hit today, and it is in a propulsion gap where we would expect the buyers to start to rally. So this is where they started that accumulation break. They bought it, they came back, they retested, buyers added, pushed away. This is our first retest of that area to see if we've still got buyers in play from this or whether they're out. If they're out, we won't hold it. If we're still in, we'll buy it again. And then we'll push back up into here, which is where the sellers started their aggressive move. That's off the news, obviously. So that would be the area I'd look to retest if you want to take that long. So if you go long here, drop down M5, just had the reverse alert literally there. So target on that one, I would put just below 125 ADR in that propulsion gap. This support and resistance, that's where I would look to potentially find the resistance again. Pound New Zealand, extended to the downside, long on that. Target that's just under an ADR. So ADR hit, M5 reverse alert has just gone in on that one there. There's reversal alert. So look at that for an ADR. Look. Doesn't get much better than that, does it? ADR, doing straight off. So yeah, there we go. ADR reversal, first entry. That is an H1 M5 mean reversion entry as well. So it's extended on the hourly below the set 25 level. We're also down at a nice area of previous support there. We have got that obviously weekly low there. So that's last week's low there at 125 ADR. So if it does push down to 125, we'll probably get a reaction there. Absolutely no profit take on that entire move. So ADR on this is 160. So you can see the pound New Zealand. Look, we've done our weekly range. Weekly range on this is 352 pips. So that is Tuesday, Wednesday, today. We've done 430 odd pips. Literally in a day and a bit, day and a half. So this thing's absolutely exhausted. We're going to get a nice reaction off of this. So the question will be whether or not we get a pullback continuation short or whether we just get a V-shaped recovery. Depends whether or not the pound is going to win out against the New Zealand dollar. So obviously, as we know, we've just had pound news this morning, which was better than expected, although the pound seems to have a negative reaction to it this morning. So if that is going to be a positive, obviously we should expect some bullishness in the pound, but New Zealand dollar is on the march at the minute. So this could go down further. But you've got three very nice propulsion gaps in play there from the pound New Zealand. That's the main one there. In fact, I'd say that's the main one there. That accumulation, that is actually the break there, because this candle here, as you can see, closed higher than that low. So if that's the accumulation, that didn't break it, that did. So that's the one I'd look to come back and retest. But conservative target, mere target, hard target, one you want. New Zealand dollar yen, extended to the upside, got out of that one this morning. So that was an H1 M5 mean reversion. You are up at ADR now, so there's potential for that to pull back. This is a tricky one. Whenever you get these big, strong moves like this in one go, like we've had with all these yens, it's tricky to know whether or not it's a pullback continuation or whether you're going to get a V-shaped recovery. Yeah, i.e. whether this is a pullback on that. Yeah, so if you go out here and look at it, yeah, pullback long, pullback long, pullback long, pullback long, pullback long, pullback long. Yeah, is that a pullback long on that leg? Or is this the start of a reversal short? This is what we never know. So whenever you're looking at market structure, you can never tell. This reversal alert here is telling you that the structure shifted back to the upside. Brilliant. So we got the long, no problem at all. But is this part of that move or is it part of that move? You have no way of knowing, obviously. So you have to pick one and scale in accordingly. So if we're going to be a pullback short, this is a 50% retracement ADR today, where we are. So nice 50% retracement, continuation leg. So standard pullback. And we're also pulling back into an area previously we've kind of found support at. So it makes sense for this to now become an area we find resistance. So obviously there is 61.8 and a 71.9 retracement as well, which is a deeper pullback, potentially on the cards too. So if you're getting short here, just be prepared to maybe take one at 175, 225 ADR roughly. So one entry, I'd probably just take two. So getting one here, getting on two somewhere there when you get a reversal alert, and then that pullback to come back down again. But yeah, nicely extended, not quite extended on the RSI, so there's no entry for me at the moment, but it's still an ADR hit. So if you want to take a quick scalp on it, your reversal alert, oh, M15, M5, what's going on? M5 reversal alert is going to be there. So you would have had one on this morning already here. So that would have been a reversal alert candle this morning. So you would have been short there from ADR. We've just pushed up and just put a new high in there. So this will be your second entry, pretty much in the same spot. So whichever way you look at it, it's a stop hunt M pattern. If we get that reversal alert, obviously. So good looking shorts, New Zealand yen. I still do think we've got some yen strength to come after what happened with that US, but it's very difficult to tell. So at the moment I've got longs on yens on the pullbacks. So some of them are pulling back better than others, but it's just very, very difficult to tell at the moment. We've been expecting this yen strength for ages. It just seems a waste. You know, when you look at the strength of this move, and we were waiting for this 50% pullback leg, which we've got, it just doesn't seem far enough after the amount of time it's squeezed for. It just doesn't seem long enough, but it is a 50% retracement we've had. So there is every chance that we might now weaken again back on the yen. But look at the US dollar yen, which is the main gauge that the Japanese are using to decide whether or not they're going to do interventions. We're pulled back way below the 72, straight into the monthly low. That looks like a spot on place to bounce from, but we've just had all that negative news on the US, which has tanked it. So it's very, very difficult. But that whole thing is one move. Yeah. So that's just over a 50% retracement. That's exactly where I'd expect to bounce for a new leg up. And as you can see, I'm long on it anyway. So kind of hoping for some strength in that yen. Weakness in the yen, rather, and some strength in everything else, but we'll see. New Zealand dollar, US dollar is the other ADR. Yes, ADR. So we just tapped into ADR. 5-minute reversal is about to trigger. But we just pulled back into support. So we haven't had the reversal alert on that one yet. Already got one sell on there, which was here at the end of New York yesterday. That was an RSI extension on the hourly. So we've pushed up again on a new leg. So your initial entry was there yesterday on the hourly RSI extension. Again, just looking for some kind of pullback on that. I'm not going to get a second entry on that today, I don't think. 567. Let's quickly do some maths. 50. $42. I'm going to leave it. Could take a second here. If you did get in yesterday, could take a second there. It's over half an ADR. The ADR, half an ADR on this is 34. That's going to come in at 42, 43 pips. So it is over half an ADR, under 3/4 of an ADR, which is what I'm using. Again, rules. They're woolly. Yeah, all rules are grey as far as I'm concerned. So could take a second there. That will jump your average up to there. You're only going to need a quick pullback into this accumulation and you'll be out. If you do that, and then it flies off to the upside and does 200 ADR today because the US dollar news comes out as negative this afternoon, you'll wish you hadn't. Okay. If only we knew. Morning, Stefan. Morning, Neo. Right, so there's all your ADRs covered. Your weekly range hits, there's loads, as you can see. Loads of weeklies. We've got US dollar Swiss. I'll go through the three main ones, which are US dollar Swiss, US dollar yen, and the Euro Swiss. So US dollar yen weekly range, obviously, as we know, this is a massive, massive drop. So going back to Monday, which is, where are we? Thursday, Wednesday, Tuesday, Monday. That is your weekly range hit, 610. It's absolutely massive. So is that Thursday? No, it's Thursday today, isn't it? So Thursday, Wednesday, Tuesday, Monday. Sorry, there. 495, so 500. Huge, huge, huge drop. We know that with yen pairs, a lot of the time we do this climbing up the stairs, and then we fall down the elevator shaft. Yeah, so that's the elevator shaft that I keep talking about. After we hit that bottom, we bounce. Yeah, so we are due a bounce. This is a monthly level, previous accumulation break where we retested and we bought. And this is where that rally started from. So this is an obvious spot. You will find some buyers because this is where the buyers stepped in last time. So good chance of getting a bounce here, but we're going to need a little bit of help from that US dollar news this afternoon. So we need those unemployment figures. This afternoon, we need the unemployment claims to have dropped, really. So we're on a 248. We're forecasting an increase. If we get a decrease, i.e. less than 251 or ideally less than 248, we will get a rally on the US. And obviously, if the PPI figures come out better than expected as well, that is also going to help massively. So anything to do with inflation at the moment going up compared to yesterday would be good. But I suspect the PPI figures today, we will get negative numbers on because we got negative numbers off of CPI. We'll probably get negative numbers off of PPI. So it's whether or not the market reacts as it did yesterday to those and whether or not they come out as a positive. If we get positive unemployment claims along with negative PPI figures, PPI will probably win. So we'll see. But it is massively extended. So if we do get a continuation drop on the US dollar today, and especially this US dollar yen, we're going over 225% of our average daily range. We very rarely do that. So this is the perfect storm at the moment. We've had a multi-day rally on the yen and we've had hideous news on the US dollar. So it's all down to the news. It always is. But we're at a really decent spot where we've got some buyers that will be stepping in trying to start a rally. So if we do get some half decent news, I think it's got a good chance of going today. If not, you need to just go back and look at where our next stop on the train is, which is the monthly lows down here, which is a long way away, 2 months ago. So we've got this area here, which is an obvious support resistance, rammed into that, came back up, hit it again, finally broke it, rejected, tested it twice and rallied. So that's this propulsion gap at ADR. Failing that, you've got that high there, which is these propulsion gaps here. So it's that propulsion gap followed by those propulsion gaps. Those are the two areas I would suspect if we do drop that we've got a chance of finding some rallies. So if you're in, like I am, I'm in an extra position on this. I really want to get out of one of these. You need to prepare to be in 6 or 7 on it, potentially, if we get negative news. And assuming this is, obviously, the yen does manage to carry on with this rally. We're not sure. You know, this is quite potentially a profit take move on the next leg up. So just because the US dollar yen's coming down hard, that's because of this. All the yens are coming down, obviously, but they're all profit takes because they've all been going up ridiculously. So we'll see. But that's really extended. US dollar Swiss really extended. Swiss francs had a lovely rally this week. If you look at the Euro Swiss, massive drop. Aussie dollar Swiss, big drop. Pound Swiss, big drop. Yeah, New Zealand Swiss. Swiss franc has been on the march. US dollar, we know, has been weak. Swiss franc's on the march, yen's on the march. This is the perfect storm. Absolutely collapsed. See the distance between my two entries here. That 120 pips. ADR on this is 68. That's 2 ADR between entries because there was literally no reversal alert for 200 ADR. Yeah, 2 average days worth of movement. No bias. So really spread out on this one. 3 entries. It's nice because the average is very achievable. But yeah, absolutely exhausted. Look at this RSI. 15s on the RSI. It's just crazy. So yeah, big extension there. Obviously, big collapse. So good chance of a rally pullback on that. You know, these sorts of collapses where you get these big catastrophic moves where you're getting a negative news event on one and a positive rally on the other. That's what you get after it. Yeah. So that's what we're looking for. Retracement, 50% retracement on the move. It's either going to be there or there. So somewhere around there is very achievable. This is the obvious support we've broken that should act as resistance if we're going to continue a downward rally. That is going to take a lot of additional money to come into the Swiss franc. And obviously money flows out of the US dollar and into the Swissy. So that becomes a big drop. But it also flows the other way. So when they start pulling money out of the Swiss franc, they'll pump it into the US. So that's why you get these big swings in the US dollar Swiss all the time. Always swings, massively volatile pair, because the Swiss franc is a safe haven and the US dollar is the world's leading currency. So when you get stuff moving out and in and out, you get big volatility. So just because it's a massive move down, good thing. It's going to be a massive move back up again. And the other one you've got is the Euro Swiss, which is again 175 of its weekly range. Huge one. Same thing with the Swiss franc. Big drop to the downside. Again, I've got 2 positions on this, which I shouldn't have. This is why I'm in a little bit more drawdown than I should be. Took a manual, EA got a second on, and I haven't had a chance to get back and out of it. So if we can get back up towards ADR today, I will dump one of those. But yeah, extended and embedded. This is going to be a trickier one to get out of because we haven't got any Euro news for a couple of weeks. And obviously Euro Swiss does move in tandem. So there's only 40 ADR on this. So it's a slow moving pair, as you can see. It's just, it doesn't move a lot. So when you get a big shift like this, it can take weeks to get back up. So it's a slow, it's like the euro pound. It's a slow, grindy pair. Actually, which isn't, it's becoming a lot more volatile, the euro pound actually now, but it used to be the same. Euro Swiss, just very grindy. So we'll see, but that is massively extended. So if you're not in it, you've got a 4-hour RSI extension on that one as well, below the 20 level. So exhausted, very exhausted. You know, again, these big collapses, straight back up again, huge rally, 50% retracement, big collapse, 50% retracement. Worst case scenario should be a 50% retracement. Back up into previous support, which will turn into resistance if it's going to continue in that direction, obviously. If it's not, we're just going to get a V-shaped recovery back up to the 24.72 zone, and then we'll decide where to go from there. Right, so there's your ADRs and RSIs. DAX is out the highs. Up into yesterday's high. So the long position's working on the DAX. Not convinced about this long today. Off the back of this, you know, DAX rallying hard. Sure, this needs a rest, but rallying hard. So upside potential on the DAX. We've looked at it on the hourly. We're up at yesterday's high. So you will find limit orders triggering at yesterday's high. As you can see, they've pulled straight back off of it. We are trying to push through. So if we get a pop out the top, there it is. There's the pop. That's all the sellers' limit orders just triggering stops. We now need to see if we can get that pullback continuation. And if we do, 125 ADR is your upside target, which is a V-shaped recovery on the last 2 weeks move. There's your target to the upside. See if we go there. Wasn't expecting that today. Was expecting a drop, but we'll see. We might not hold this area. Yeah, they've popped it, but we now need buyers to step on board and continue the rally. So certainly buyer heavy. Look at these wicks. Every time the sellers push down, buyers took control. Push down, control, down, control, down, control. Buyers fully in control this morning. But we need a continuation on that move. So that's my target, 161.23. Plenty of room. Plenty of room long. So we'll see where that goes this morning. RSIs, there's absolutely loads of them. Pretty much every pair is RSI at the moment, because obviously we've had all this massive movement of the US. So there's loads of opportunities all over the place. You know, I'm running this account at the moment in here, which is taking pretty much every position out there. So obviously it's going to get into a little bit more drawdown than normal because it's running every pair. It's overexposing itself. But you can see how many opportunities there have been this week on RSI. Pretty much every pair has had some kind of trigger on the hourly this week. So we are very, very extended on a lot of things, and obviously with big extensions comes big snapbacks. So I'll go through them quickly, but we've obviously looked at most of these this week, and most of these are additional trades on top of the additional entries. So if you're looking for something new to get into, you can pretty much pick a pair at random. You'll probably find it's either extended on the 4-hour or the hourly. So there's very few. It's actually easier to go through the things that are not extended at the moment because there's less of them. So yeah, it's half the currencies basically. So Aussie dollar CAD, one short on that at the moment. First entry off of the hourly RSI extension. We're above the 75 level, 75.12. That's also an ADR hit to the upside. I might as well go through every pair actually. It's probably easier just to go through every pair rather than look at the RSI dash because it's lots. So Aussie dollar CAD, Canadian dollars just had bull news. Aussie dollar is rallying off the back of New Zealand. So the Australasian pairs, Aussie and New Zealand, are doing better than the Canadian dollar off the back of the news that we had yesterday. So at the moment, we've got that rally and continuation to fill this propulsion gap. So 175 ADR, roughly, somewhere around there is going to be probably where you're going to start to find they're going to run out of steam if they can get there. They may need to pull back to get a new leg in to go up there. So either we're going to get that, or we're going to rally and continue, and then we'll come back down there at a later stage. So it'd be a similar move to that long term. If you project that into the future, this massive propulsion gap, yeah, it's taken weeks to get back there. Potentially it could take weeks to get back there, but it also could just do a pullback and rally. Look at ADR. This is why the ADR indicator is on the chart. You can see what the chances of getting back here are slim. Yeah, 12% of the time the market goes beyond 150 ADR. So to get back to here, it's got to have a pretty strong sell rally, hasn't it? To get up to there from where we are now is 3/4 of an ADR. That's much easier to do than it is to pull it all the way back to there. So the likelihood is we'll probably push up a little bit more, get a little bit more extended, and then they'll do the profit take. Come up and get that sorted first. So more likely to do that, I think, than come back down there. So second entry, average up, wait for the drop. Aussie dollar Swiss, so that's not extended at the moment on anything. Was a 4-hour RSI extension off the monthly lows. You've got a nice W pattern bounce there. Haven't got the reverse alert on the 4-hour yet. Hourly you have. Oh, no, you haven't, because we've had news. Yeah, so we had a whipsaw yesterday. You did have it. It was there, but it's come down and invalidated it. So it is a W pattern, but it's just the news whipsaw yesterday took out any stops. So So yeah, like that as a long. Aussie dollar yen, that isn't extended. Got out of that one. So that was your entry. Out of it this morning, looking for it to come up into propulsion. Again, we're either going to do that or we're going to do a V-shaped recovery and come and sort all this out. We've got this as well to sort out. And now we've left a propulsion gap to the downside. So again, same thing, yeah. From where we are right now, you've only got to go half an ADR to get those propulsion gaps filled. To come all the way back down to here, you've got to do 125% of an average daily range. Much easier to do that first and then do that. Aussie New Zealand, not extended, sideways. Haven't had a trade on this since all the way back here. So just been gradually kind of grinding around, not doing anything at the moment. As we know, this is off the back of a massive multi-week squeeze off of the New Zealand interest rates. So looking at yesterday with the New Zealand interest rates, see, look at the difference, yeah? An as expected interest rate rise, or as expected interest rate result, as expected interest rate result. Same thing, it's the same news. We got the same information, except the market was completely offside positioned there. The market is positioned correctly now. So this is the difference, yeah? When you see these things happening, these news moves happening, when I say there's a fundamental shift, they only happen when the market's screwed up. If the market was priced in correctly for the interest rate, it would do that. That move there is because the market got it wrong. So it has to correct itself. It's over leveraged on the New Zealand dollar. It was expecting a different result to what it got, so it priced it wrong. So then for you get that massive correction, as they call it. So as expected, no reason why we shouldn't do anything but have a think about where to go next. Aussie US extended to the upside, so one short on that from yesterday. Second entry will be going in somewhere up here if we get up to those highs, 125 ADR, 150 ADR, 175. So first entry short, second entry will be going in up there. So we're putting in market structure long. So there's your low, your higher low. We're looking for a higher high. We'll probably get a double top first before we get that. So shorts on that at the moment, waiting for them to come back down, test that propulsion gap, hit that high, test that propulsion gap, one or the other, somewhere down there, looking for a correction back down to that area. CAD Swiss extended to the downside, longs on this already. Parabolic, so done 1, 2, 3, 4, 5 drawdown controls on this already. Is that right? 1, 2, 3, 4. 4 drawdown controls on this in 5 days. So it just shows you how much that moved. I'm scaling out at 1.5 ADR. Yeah, ADR on this is 47. Since I got into this, we've done 140 pips. We've done 3 ADR literally in 3 days. Just, you know, Swiss franc. Huge run on the Swiss franc. Canadian dollar didn't get the reaction it wanted. So this is positive news on the Canadian dollar yesterday, look. Wrong. So yeah, I mean, you can see where my targets are on this. So when I initially got into it there and scaled in, that was the obvious place to go for, which is previous support. So that resistance turns support, 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 support. Finally broke it, looking for a retest. Haven't got it yet. So that propulsion gap is in play as potential upside support. Now we've broken down though. You've got this level here, which is that previous resistance support, which could well turn into resistance. So this propulsion gap here now is a potential upside bounce point. We'll see. But a proper pullback on that move is going to be higher than that propulsion gap. So you look at the move that we've got here. 38 retracement brings you back up into that balance. 50% retracement brings you back up to there. 61.8 and 70. So the 71.9 is a deep pullback on that. But I would expect us to get to at least a 38. So somewhere in that accumulation, somewhere in that propulsion. So just going to adjust target to that. bring all those targets down. So that's still a nice profitable exit, but obviously wrong on this. 5 entries, wrong. Nothing you can do. Swiss franc decided to power up massively. So get out when we can. So that's CAD Swiss. CAD yen, big extension to the downside. So again, a lot of these yens I've got on. Let me just adjust that because I've got 2 positions on there. One of those is mine. One of those is the EA's. CAD yen. That one's mine. Close that one out. Don't want to over leverage on it because there's only 2 positions. So I took one manually. So I'm just taking my manual one off basically. So yeah, CAD yen. Obviously, we know all the ends are the same. Big drop. So that was the obviously the squeeze. Exit on the squeeze. Now we're the other way. So we're looking for that push back up. Continuation short, or we're looking for that pullback continuation long. Either way, we're extended to the downside, so we're looking for the pullback, the profit take on that move. So I'm looking for half of that to be retraced. That's where my TP is at the moment. Probably get out before that, but we'll see. So let me just put the TP back up there. So somewhere in that, in fact, what I'm going to do is I'm just going to readjust down to that level there. So this area here, we hit that 4 times or 3 times, which is this support here. So we hit this support, came back down, tested. It's kind of that as a zone rather than a level, obviously. But so somewhere around there, as we push up, we're going to get a reaction there or get a reaction there if it's going to continue to the downside. Obviously, if it's going to be a V-shaped recovery, that's fine, but I'm not going to hold it all the way up to there. I shall get out there. CAD yen and the Swiss yen. So out of the Swiss yen, there's no RSI extensions on this at the moment on the hourly, so no entries at all. Last entry was there, and obviously out of all of that on the pullback. So the Swiss yen, as you can see, this is, I mean, with when you're trading every single instrument, if you go get into shorts on all of the yens at the same time because the yen is rallying, some of them are going to pull back a lot further than the other, depending on what the cross currency is, what the base currency of the cross is. So some of these, like the US dollar yen, huge drop. Swiss yen, because the Swiss is bullish, tiny drop. You're going to get completely different results against the yen because of the cross. So Swiss franc is very strong at the moment. So out of that one, and this is why I get out of these, this is why I don't hold them for a huge pullback, because you've got no way of knowing when something is going to power up. Fundamentals at the moment give you a rough idea, but still no idea. So you get out with money. You bank money, because what you don't want is to go, this looks like it's coming down to this support. I'm going to put my TPs down there. If that does that, you're stuck for what? Another 2 weeks, 3 weeks, 6 weeks? I don't know. You're stuck. So get out. This is the whole purpose of position trading. You're taking a position until it comes into profit, and then you take some profit. Taking profit is your goal, making money, not making a fortune and getting that, wow, look at that, I made 17%. Your job is to make money. So you make money. Don't get greedy. Greedy people get killed, basically. So this is a great example. Yeah. The pullback on this, we look at a 38 retracement as being a shallow pullback. We look at a 23 retracement as being a flag. Yeah. At the moment, this is a flag. Potential flag break long. So this is a continuation rally by the Swiss against the yen. Hasn't got down to 38 yet. It may well get down there. So this might just be a pullback on its way down to a 38 or 50 or a 6. I have no idea, obviously. No one has. So there's lots of things that could happen. But this one hasn't made it. This one has excelled. Yeah, over 100% retracement on the move. Yeah. This is why you get out when you can get out. You don't get out where you want to get out. Market decides when you make money, not you. So yeah, Swiss yen. Let me just catch up on the chat. Morning XR update.news. Body game are you position trading in funded account? No. You can, but it's very hard work and very unreliable. They only give you 5% drawdown, because they know that traders that make money don't live within rules. Got an email saying New York Colo Farm has reopened. Yeah, but MT4 just locked up like it did yesterday. MT4. MT4 should have nothing to do with that. Do you know any good EA you can recommend? Really? Let me send you a link. But just to clarify, in case you didn't know, every single one of the trades taken in here is taken with my EA. I don't do this, my EA does. So if you think that's good, there you go, there's one. DW, you posted your current H1M5 set file in Telegram. Can you explain why you changed certain settings like 1.5 ADR for DD or TP? Just because I wanted to have bigger drawdown. I explained that yesterday when I posted it. So yeah, I went through it yesterday. If you go and look at yesterday afternoon session, I explained in detail why. Euro pound is a good example. I think it was. No, it wasn't. It was one of these. But I explained why I've changed my drawdown control wider. That one. There you go. So this is why, in a nutshell. So this was getting out with 1 ADR of drawdown control, yeah? The vast majority of the trades that the EA takes and closes are 2 to 4 positions, 2 to 4 trades in a position. So this one is a 2 entry, yeah? In, out. That drawdown control loss of $130 odd was taken because the market pushed 1 ADR against the trade. We know it does that because it spends 58% of its time within an ADR. So 40% of the time it's going to push beyond an ADR. So it doesn't make sense to have 1 ADR doing automatic drawdown control. 1.5 ADR up here somewhere, yeah, meant that I would have got in, out without taking that loss. If it goes 3 against, then yes, do a drawdown control, but there's no point in having a drawdown control 1 ADR apart. I've said it many times, I'll say it again. There is no right or wrong setting in position trading. You take a position, you're in, right? I'm going short on pound CAD. I'm short on the pound CAD. Where I put my entries, where I do my drawdown is entirely up to me, you, everybody else in the room. Yeah. There's no right or wrong. You'll get out of it with 1 ADR. I'll get out of it with 1.5 ADR. If it pushes 5 ADR against me, I wish I was you, because if I'd have got out 1 ADR, I'd be in less drawdown. Yeah. The times it goes 3 entries and out, you'll be wishing you were me getting out with 1.5 ADR. Yeah. Sometimes I'm going to wish I was you. Sometimes you're going to wish you were me. I can't tell you which trades are going to be which. So pick one, use it, and make money with it. There is no right or wrong. Everything makes money as long as you're not using something that makes you a loss, which is a stop. If you use a stop, you will stop out with a loss, guaranteed. If you do drawdown control with the EA at 1 ADR, 1.5 ADR, or 2 ADR, you will take a loss at that, or that. Which one it's going to be, nobody on the planet can tell you. Pick one. Honestly, it just doesn't matter. I think the problem is, I know why people ask me, what's the best setting? Because all the other scam EAs out there, pretty much everything on the marketplace, has a set file. They release, this is the set file for the Euro US dollar M5 chart. Use this one. This is the most profitable at the moment. Look at the back test. Of course, it's the most profitable. You've curve fit those settings to the data to make it profitable. Of course, it's the most profitable. It's not going to work. And this is why you'll find that these guys that release all these EAs that look great in back tests, they keep sending you new set files every 2 or 3 months, because all they're doing is they're sending you the set file that got the best results over that period of time. It's just all a con. So use a set file. There isn't a right or wrong one. There is a way of controlling your drawdown. The EA does that for you. Which one is best each month is going to be different. But using your head, knowing that 58% of the time we stay within ADR, it makes more sense to put the initial drawdown control outside of ADR, doesn't it? The only reason I set that set file up initially with one ADR was to show it working and to do it along the way, because it was trading all the pairs and it needed to keep on top of drawdown. But I've always done drawdown control manually myself. I've not used the EA drawdown control setting. I have started doing it now because it just makes life so much easier rather than having to manually do it. It's just one of those things I can tick off and go, I can't be bothered to do it. I don't need to. So, but 1 is proving too tight. 1.5 is better. 2 would be even better, but 2 would be more drawdown. There's a trade-off. Basically, what the automatic drawdown control is designed to do is keep this more manageable, but it will make, there's a 1.5% loss there. That is drawdown control being executed. If you didn't have it set, that wouldn't have been a loss, but that would have been now sitting at 10 point something, wouldn't it? So it's a trade-off. Yeah, but that's why. And the TP side of things, up to you, TP. There's no right or wrong TP. Half an ADR, 3/4 an ADR, 1 ADR, but I've chosen to basically set them manually in propulsion gaps and then adjust them as necessary. You see me just adjust one this morning, adjust them as necessary. If this pushes up from here, then I will move all these TPs up into this propulsion gap, because we'll take another entry, the average will shift, and that will become a profitable trade. Just use propulsion. We know propulsion gaps get filled. All these grey ones are old propulsion gaps that are filled. Yeah, that's what the market does. It moves up away from a level. It leaves propulsion gaps in place as it has hard rallies where the buyers buy. And then when it comes back down to the areas where it left that unfinished business and retests them. It either retests them, as it has with that one, or it fills them, as it did with that one. So if it's going to test or refill, you put your TPs at the top, fine. If it pushes away from you, adjust your target. Don't forget, position. The reason position trading works, the advantage of position trading is, and this is why the banks and institutions trade this way, is because we can not predict when the market is going to turn, because we're not in control of it. So it's like having a blindfold on a racing track and trying to predict when you need to turn the corner. Just not possible. If you've never been on that track before, you've got no idea. You can look at it and pull the blindfold down and guess as to when you do it, but you really don't know. And you're not the one in control of it. It's how fast you approach the corner. There's so many variables. Same with trading. If you can't predict when this thing is going to come down, what you have to do is adjust your entry price so that you are constantly within a target of a pullback. Yeah. So if we are adjusting our entry price, we adjust our take profit. We're looking to get out in a profit. We're not looking to get out with a fortune. We're looking to make money. So if we're adjusting, we need to adjust. So if you have a 1/4 of an ADR target in the EA, you will always make a 1/4 of an ADR. If the closest propulsion gap target that you think it's going to reach is 1.5 ADR away, why take a 1/4? Yeah, we know that these get tested. So if that, in this case, is about 1.25 ADR from my entry to there, why would I get out there? You're limiting your upside, aren't you? But there's nothing wrong with that. It works. Been doing it for years. I'm just looking at manually doing this. And as you've seen, I'm out too soon all the time because that's what I do. What's the one I just closed today? pound odd. Yeah, I'm always out too soon. The reason I'm out there is because of that propulsion gap. But the reason I'm out there is because of that propulsion gap. I knew that propulsion gap was a valid target, and it was, and it hit it, and it's done. But I'm out too soon. I'm flipped long now, look. I need to put a target on that. So just taking a long on the pound odd. There you go. Yeah. Target. I could target that. I could also target that. But that makes me money, and that's easier to achieve than that. And it's easier to achieve than that. But if I just target half an ADR, I'm going to get out there. Why get out there? It's an accumulation. There is a valid reason, but that would probably be a better place to get out. So I'm just trying to take the mechanical element of making money out of the profit target. Really, that's the reason for that setting, that set file. But it's more work, as you've just seen. I've got to do all this manually. It is more work. But I think it's going to be more profitable long term. So, at the end of the day, it's all the same thing. Scaling out at ADR or at a percentage level. In the end, it changes every month or so. You've got to adapt. This is the thing. You know, again, there's no right or wrong. There's no way of making money consistently in a market that is dynamic. Yeah, you can't do it. Because the market's going to change all the time. Market conditions change. ADRs change constantly. This is why we keep track of the things. They change all the time. I've said it many times before. Before COVID, I was trading pound New Zealand at 350 ADR. It's 161. It's half the size it was. Yeah. So the pound New Zealand's daily range is half of what it used to be. If you've got a system or a strategy you were using before COVID that targeted a specific number of pips, it doesn't work today because the thing is not the same. It's a completely different instrument, the pound New Zealand today. It's moving differently. The euro pound is moving totally differently to before COVID because we had Brexit. We are now completely separate, different trade organizations. It all moves differently. So you've got to be able to adapt. So you have to just change stuff as you see it changing. The RSI, I changed the RSI earlier this year from a 21 to a 14 because the market was just so tight. I wasn't getting any entries. There's no signals. The RSI dash was flat. So you have to adapt. All right, it's not working at the moment. Let's switch down to the 14. All of a sudden, we got a load of signals, started making a load of money. Then the market volatility picked up. It's like, whoa, I'm getting deep into drawdown because I'm getting in too quick now. Adjust it back to 21. Again, you need to do that in the EA. You've got to adjust the settings. I've said it many times, the back test is going to show you how the EA settings you're using would have performed in the past. The past is the past. The future is nothing to do with the past. There are conditions that constantly repeat themselves. Yeah, we know, we can see, you can back test. When this thing gets over there, it goes down. When it gets here, it goes up. When it gets up there, it goes down. When it gets down here, it goes up. That's not going to change because this is to do with the way the market produces alpha, profit. The market pushes and pulls. That's how it makes money. After the push has to be a pull. The pull is where the money comes in. The push is where they get into their position. The pull is where they get out. The pull is where they get in. The push is where they get out. Yeah. So all this is doing is measuring that movement. That's not going to change. It can't because the banks have got to be able to make money. If they push the market up there, they're long. If they want to get out, they need to get short. If they don't get short, they can't take the money out of the market. So that's what we're doing. What we don't know is how much push and pull they're doing. Yeah, that's what changes. If that volatility sits like that for an entire month and never hits that or that, you know the market's contracted. If the market's contracted, you need to your instruments that you use to measure volatility need to contract with the market. You have to identify that manually. So if you test an EA and you see the EA profit curve going like that, and then it suddenly goes like that, and then it suddenly goes like that again, you know you've got a good, nice, robust strategy. But what happens is, in these periods, the conditions which are optimal for that EA are not optimal. There will be an optimal condition here that you could switch that negative into a positive profit curve. But you don't know what they're going to be until they've happened. So you have to pick something that you know works the vast majority of the time and you'll have problems with. So the vast majority of the time, the 21 RSI on the hourly works 80% of the time. 20% of the time it won't. And that's because the market goes into a squeeze. I can't predict squeezes. No one can. So we deal with the squeezes. So you have an exit mechanism to deal with the bad conditions. The good conditions, just the EA just gets in, gets out, gets in, gets out, gets in, gets out. When it's a bad condition, we've got to get in ourselves as the trader. That's our job. Yeah. We can't teach an EA to identify a bad condition. We can, but what do you want it to do? You know, the conditions are going to be different all the time. That's what I mean. You can't have the same thing. And I put out 100 set files out there. They'll all be profitable. Same with the opening range breakout EA. Done 50,000 tests, all profitable. But none of them are going to work all the time. They're all going to fail at some point. Speaking of that, what's the DAX doing? Oh, good. We're long. Yeah, so I mean, you know, this opening range breakout EA, this variation that I'm testing here, is working great today. If you were using the 5-minute ORB on the original version of the Market Reverse Alerts EA, you're in the same trade as me. Your stop loss is there instead of there. That's the only difference you've got. You're there. If you took the 15-minute pre-market today, you got a 2-hour return. If you took the 5-minute pre-market today, you got a 4-hour return. Yeah. If you took the 15 pre-market yesterday, you got a double-ended whipsaw stop out. It's exactly the same trade, exactly the same condition. The results are not different because the settings are wrong. The results are different because the market conditions are different. But we can't predict the future. So this is what I mean. Everything you do in trading is totally random, controlled by a market, which is random. So what you have to do is find a way to extract money from a random movement. The only way you can do that is by accepting the fact that you can't predict it, get in and get out when you get an opportunity. If you get in and get an order in there that takes money out of your account, a stop loss, that's what will happen. Because you can't predict whether it's going to go up or down, can you? You can try and find a strategy until you're blue in the face with a 50% strike rate, but whatever 50% strike rate was for the last 3 years isn't going to be what's going to happen for the next 3 years because they're different. The 50% strike rate isn't going to replicate itself in the future. You're going to get something different. This is why everybody fails at trading. This is why 95% of people can't make it, because they're using a system or strategy that has no chance of working because it can't predict the future. It's not an AI. And even an AI strategy can't predict the future, can it? Until an AI can create the future, i.e. take control of all the bank orders and then trade for you based on what it thinks it's or knows it's going to do in the future. You know, it's just not possible, is it, at the end of the day? So accept it, get in and wait for the market to come back in your favor. That's all you can do. Look at that entry there. Beautiful. Absolutely spot on. Perfect. Couldn't have got it better, could I? It pushed up, pulled back. I got in. If you'd have put a stop above that high, happy days. That would have been one of the 30% of trades you would have got right. But that's not what happens 90% of the time. What happens 90% of the time is you get in, you put a stop, you go long, you get stopped out. You get in again, you put a stop, you go long, you get stopped out. You get in, you put a stop, you get stopped out. You get in, you put a stop, you go, oh, brilliant, move to break even, you get stopped out at break even. Damn. Get in again, get stopped out. Get in again, get stopped out. What did I do? I got in loads of times and all of those came out with 1.5% profit. Because I didn't put an order in the market to say, take all my money away. Pointless. The banks did that, they'd be bankrupt. We wouldn't have a banking system. We wouldn't have an economy. But anyway, I'm daft. Phone bill was overdue. Paid bill and MT4 started up again. So XR update.news. You have been monitoring a server room in New York that caught fire to see if your terminal would work and you forgot to pay your phone bill. I can't say I've been there, but that is amusing. What strategy you recommend to trade in a funded account? Any strategy. Literally any strategy. Opening range breakout. If I was you, and this is a funded account, I am trading the opening range breakout strategy, the opening range breakout EA. Or support resistance bounce. So take support resistance bounces. Go long there. Why? Because that's where they went long. Buy. They bought there. So when it gets back there, buy it, because that's what they did last time. That works as well. Sell highs, buy lows. Yeah, higher the days, higher the weeks, higher the months. This is why this indicator has all these lines on here. I want to know where the weekly highs and lows are, because the market spends a lot of time in them. Yeah, go and look at a weekly chart and plot the highs and lows of the week. There's the low of the week. There's the high of the week, that candle. Yeah, we pushed up, we pulled away from it. We pushed up, we pulled away from it. We pushed down, we pushed away from it. We pushed up, we pulled away from it. We pushed down, we pushed up. We didn't go anywhere. Pushed down, pushed up. Pushed up, pushed down. Broke it. Pushed up, pulled away from it. Pushed down, pulled away from it. Yeah. Highs and lows of the weeks. The market spends 80% of its time in balance and mean reversion. 20% of the time it spends trending. If you want to be successful, you do not become a trend trader. There's a video on my website about this. You become a mean reversion trader, because when the market hits a level that it was sold from, when it gets back there, everybody that has sold it is defending their positions because they're short. So they sell it again. And if you try and beat them away again, they will sell it again, and they will keep selling it until you go away, and then it will move down and they will take a profit. When I say they, I'm talking about banks who have virtually unlimited cash, right? Let's say this orange line here is a low, and I am a bank and I have taken it long. Forget the time frame. It doesn't matter what time frame is. This is a level in the market, a price they've bought from. When it gets back here, if I'm the bank and I haven't taken profit on this move, I'm long. And if you want to go that way and I've got $25 billion, I'm just going to keep buying. Every time you sell, I'm just going to buy your order, and I'm going to keep buying your order over and over and over again until you've got no more orders left. And then I'm going to move up and you're going to go, oh crap, I'm losing. Then I'm going to move up again and you're going to go, all right, I'm out. And I'm going to buy that order that you've taken, and I'm going to take that as well. And I'm going to push away. This is why the market moves the way it does, because the banks are buying and selling levels. So if you want to use a prop strategy, buy and sell highs and lows. Yeah. Areas that price has been to before. Propulsion targets, propulsion gaps. Yeah. But you know, this is the trouble. If you've got a strategy that has a very good strike rate, you will have a losing streak. On the website, there's a spreadsheet, risk reward calculator. And this will basically explain this one you can see here on the screen, this white one here. This will plot out your P&L based on the order of your wins and losses. So if you've got a strategy, for example, that's got a 50% strike rate and you take 20 trades, what can happen is if you risk 1% of your account per trade, you have the possibility of losing 20% of your account, even with a 50% strike rate. Because a 50% strike rate doesn't mean that you're going to get a winner, a loser, a winner, a loser, a winner, a loser. What it means is half of your trades are going to lose. And it could be loser, 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 and then winner, 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 winner. And if you've got a positive risk reward, it'll be positive. But if you lose 10 trades in a row, which is very possible in a trending market when you're trying to mean revert it, if you've picked the wrong market, you're going to lose 10%. And if you take 10 trades a day, you're going to blow your account in a day. Yeah, you can't predict the order of wins and losses with a stop loss. Yeah, I can't predict whether the DAX is going to go long or short today. I have no idea. At the moment, this is on its way to making me money. It could do that, and then that, and stop me out on both of these entries today. I can't see the future. But if you use a strategy that has a long-term edge, you will find in your P&L, it goes like that. Yeah. These times you will make money in prop. These times you will blow accounts. So if you take 10 evaluations and you start each one on a different day, you will get a totally different result with exactly the same strategy, because the win-loss order will mean the difference between passing or failing an evaluation, being paid from a funded or blowing a funded. You can't control it because it's a random thing. Yeah. So which strategy should you use? One with a long-term edge. Backtest something that works long-term, use it. But understand that you will lose a lot of evaluations because they set a limit of 5% a day and 8% or 10% or 12% overall on your account. And either your strategy will blow it or you will blow it because you get 3 or 4 losing trades in a row and go, screw this isn't working, double my exposure, oh, pop. Yeah, either you lose it or the strategy loses it. However, I have passed evaluations in a day by taking 3 trades with a 3-to-1 risk-reward ratio, and all 3 of them played out with 100% strike rate and made me 9%. Does that make me a good trader? No, I had 3 lucky trades in a row. Strategy's good, but the order that those trades landed in meant I passed an evaluation in one day, which is why a lot of prop firms have a consistency rule. You've got to make no more than 30% of your profit on one individual day. So they want you to trade 4, 5, 10 days, however many it be, but they want you to be consistent. Why? Because they know you can't. Because the market's not going to let you be consistent because your strategy is not going to work in the same way every day. I had on FTMO yesterday, on Top Step yesterday, I've got a Top Step evaluation going on futures yesterday at the moment. I made $1,400, I think it was yesterday on the account. Yeah, so that's my account yesterday, right? 87% strike rate, $1,400 profit. Why did I stop there? Because I had to. Right? That trade, not that trade, this one here, these 2 trades here, right? Made up $750 of that. So 2 of the trades made up half of that profit. What happened yesterday? I sold the Dow at the high yesterday. It popped down, it pushed up, I added to it. It went down like that, and then it accumulated for a bit. And then we had a big down candle come in. I put the whole thing to break even, and we had another big down candle come in. I closed it there. I wouldn't have closed it there on my account because I was expecting that to happen. And it did. I could have made 3, 4, 5, 6 grand on this yesterday. Look at it. That thing there. I could have held that and made 3 times that, but I wasn't allowed to because they've got a consistency rule, which means that I can't bank more than 35% of my total profit in one day. If I'd have banked 3.5 grand there, I'd have had to throw it all away. Prop firms have rules that stop you making money purposefully because they know how trading works. They know that there is no way I'm going to consistently do anything, because the day here where I made 3.7% was a big day. I have to have the big days because I'm going to have big losing days as well. But they don't let you have that money because it's too much. It's more than 30% of what you're going to make. Yeah, I've made 14% on this account. 3.7% of it came on one day because the market moved in my way and all the trades I let play out were lucky. Because it was all luck, isn't it? It's 50-50. Every time you press the button, there's a 50% chance it's going to go up or down. That's the only thing we know. In fact, it's going to go sideways and up and down. Yeah. So if it goes up and up and up and up for 150 ADR, I'm going to take all of that if I can hold it. But in prop, they have limits. They have things set in stone that means you can't, there's no strategy that will consistently work. So I'm sitting here now looking at my account going, I've got a 6K target on this. I could have done 4.5 of it yesterday, but I didn't. I did 1,400 because I'm shackled. This is why you will always make more money trading your own account than you will on prop, but you can't get enough money together because you need a lot of money to make money in this market. It's the trouble. It's a double-edged sword. Henry goes, I lost 2 funded accounts and then used the RSI dashboard and trade as a position trader. Yep. Can you program a high-low dashboard or something like that? You don't need a high-low dashboard, right? Do you know what I do in my prop? I run multiple strategies. I run the ORB, EA. I run. I've got completely discretionary trades to take as well. But do you know what I do? I come in here and I go through the charts every morning on my prop accounts, and I go, right, buy limit, sell limit, next, buy limit, no sell limit on that one. And why am I putting a buy limit there? Yeah, if it comes back down to there, it's probably going to bounce. If it doesn't, I'll get stopped out on it. Yeah, that's literally it. You don't need a dashboard or an EA. Go and put your orders in the market. If it's going to bounce at support and resistance, it's going to bounce at support and resistance. So stick an order there, because all the banks are doing are sticking orders at highs and lows. This area here has an undisclosed amount of orders sitting there already. Millions of pounds, dollars worth of orders are sitting at that level. We've got movement going on at the moment. There's loads of ADRs on the CAD pairs by the looks of things. I've got those in a sec. But there's loads of orders sitting at these levels. So put yours there as well, because if their orders are going to trigger and there are not enough buyers to take it through that level, because there's so many limit orders that they will get overwhelmed, it will come down. Put yours in the same place. Yours will also come down. It will get triggered and it will come down. But that's all you need to do. You can also set alerts. So go on, you right click, click alert. There you go. I've got an alert now. So when it gets to that level, I'm going to get an alert. You don't need a dashboard to monitor this. Very easy. Stick an alert down there if you want. Right click, alert. There you go. There's my alert. A little arrow. So when it gets to that level, I'm going to get an alert. So I can now come down here, and if I want to, the best way to do it would be to wait until it gets down to this level here, which is the black line from the indicator. And when I get a reversal alert, I'll go long. The best thing to do is to take the reversal alert, because the reversal alert is telling you that the guys that you want on your side, the buyers in this case, have broken structure to the upside. They've given you that, we're on board, boys. Brilliant. I'm on board too. So just take a reversal alert at support resistance. Sometimes it will go through it. Sometimes it won't quite get to it, because we don't know where the orders are sitting. They're sitting around here somewhere, because that's where they were previously. It's such a simple strategy, and it relies literally on one indicator, the reversal alert indicator, and lines. If you use the support resistance propulsion indicator, it will draw all the weeklies and monthlies on for you. There's other indicators out there you'll find for free that do it as well. But, you know, that is a very, very simple strategy, and it works. I do it all the time. I use half an ADR as a stop loss. So if you look at this one, that's ADR. That's half an ADR in distance on this instrument. So when we get down to here, wait for a reversal alert, half an ADR. Give it room to breathe. Yeah, give it room to wiggle around. It spends 58% of its time within ADR, going up and down. If you put a tight stop, 58% of the time it's going to wiggle for a bit. That's what it does, the market. It goes up and down within ADR 58% of the time. So if you put a stop loss half an ADR below your entry, you're giving it, you know it's going to do it. So you're just giving it that room to move around. Yeah. If you get in, let's take this black line basically as an example. Yeah. If you get in there, it bounces. So let's say the reversal alert triggers there. That's your entry. If you put your stop there, right, which is 30 pips, a quarter of an ADR, right? There's a high probability that if they did a stop hunt W reversal, right, you're going to get taken out. If you put it half an ADR away and they do that, you won't. This is not an exact level. Look at this, right? That's the level of the weekly. That is the bounce off of it. You can't see it, but there's a wick there. That's well, you can see that black line. That's the weekly level. So that's where the bounce happened. And then it came back down, retested the level again, and it flew up, right? Entry there, stop half an ADR apart. And if it wants to come down and muck about, it can. Look at the risk reward on it, though. 4R plus. I target 2R. That's it. All you need. 1.5R, 2R is all you need to become profitable with support resistance, because as I said, 80% of the time the market's in mean reversion. My strike rate's nowhere near 80%. I don't need to be, though. So yeah, that's a simple strategy. But don't expect to be right. Assume you're going to be wrong all the time and you'll be pleasantly surprised. Don't worry about it. Just get in and forget about it. And don't use 1% risk. That gives you 5 trades. If you take 5 trades on a day, let's say you go through all these charts, you've got 28 pairs, and you put a load of entries. If you put put pending orders in, or if you just put alerts in and wait for the reversal alerts indicator, for example, if you take 5 trades that day, yeah, on the hourly chart, on the hourly support resistance levels, and all 5 of them fail, you've blown your account, right? You've got 28 pairs. So if less than a quarter of them happen to get to a support resistance level on the same day, because there's news yesterday, look at yesterday, you're going to blow your account. So don't use anywhere near a 1% risk. Use 0.5% risk, 0.25% risk. Give yourself a chance to pass an evaluation. It's lovely to be aggressive and pass in a day. I've done it, right? 1% risk, 3R return, 3 trades, job done. But I've many times done 1% risk, 3 trades, 3% loss. 1% risk, 3 trades, 3 loss. Bang. Done that as well. Why? Because it's random. It's 50% chance of it working or not working. And it's not in your control. So it doesn't matter how you get in, does it? And this is why I position trade, because if you're using your own money position trading, it doesn't matter what happens after you take that trade. You can adjust, deal with it. You've got time. We're trading the hourly charts and the 4-hourly charts here. So it's not as if you're going to get in with a risk and by the time it's gone up there on a news event and moved 150 ADR, you're panicking. You're like, all right, okay, brilliant. It's gone up 150 ADR, so it's even more stretched than I thought it was. Let's get in again. Time. But you can't do that in a prop firm because they, again, limit the time. Everything that you do as a trader that makes you money, they have a rule to stop you making money, to stop you doing that thing. Partial martingale, right? So, increasing your lot size by a small margin every time you enter a position. They put rules in place. Why? Because they know it works. Everything they know works. They try and stop you doing it. So do it with your own money if you can. But if you can't, you've got to accept the fact that you're going to blow a load of accounts. It's just the way, it's just life. It's just what's going to happen. DAX, well, I'm just watching the Dow now over here, and the DAX, that's rallying, so I'm assuming the DAX is also going. We are running out of steam on this. I'm just a bit worried about this DAX move because we are so unbelievably stretched on this DAX. I'm just finding it hard to believe that we're going to get up there today. We've just had basically we've had a 2 inside bar set up. The reason I'm looking at it is because we've just had a 2 inside bar set up, yeah? Which is an inside bar on an inside bar, which quite often happens at a top. So if we get another inside bar here, basically what it means is the buyers have just completely run out of orders. If they didn't, we'd be pushing. Either that or they're hitting an iceberg, which is basically saying, I want to sell from here. So I'm just watching it closely here. In fact, what I'm going to do, just to protect the position. Yeah, so It's very, very slow, the market today, yeah? So there's your push and rejection. Then we've got an inside bar. Then we've got an inside bar on that inside bar. Now we're painting an inside bar on that inside bar. So if the buyers are completely running out of steam, if they break that low, the sellers are in control. Yeah, so if the sellers are going to be in control, I don't know where we're going to go to the downside. So it makes sense just to take that trade off, walk away, be done for the day. Yeah. If the buyers are going to continue, obviously, we'll go with it. I might trail it 1300. So 13-point trailer, basically. So if we are going to continue to rally, just let the market go with me and wait for that move down, and then we'll just jump out. It's locked in, basically. So just don't like that setup. It's typically the market just running out of steam, which you would expect after a move like that. So we've gone completely off tangent this morning, haven't we? Am I right in thinking that Top Step does not have the DAX? No. You can only trade the CME exchange. They don't give you Frankfurt. No futures firms allow you to trade the DAX. No one trades the DAX in futures. It's what they call a thick market. They don't trade thick markets very much intraday because you don't get enough movement on them. There we go. So we are popping again. So I will get trailed. Just get trailed along with it. Yeah, don't trade the DAX. I don't trade anything in the mornings. I don't trade the Globex, what's called the Globex session on the US indices. So obviously they're all open. You can, the markets are open. We can trade them all now. But I don't because it's so slow. You just find you get chopped a lot. You could trade the ORB because you'll see the markets are moving. Look. Yeah, so, this is the DAX. This is what's open now. Yeah, they're all doing a similar thing. So you can. But if you measure this movement as a percentage of ADR, it's a bit of a slow day, but this is very, very, very slow, tiny movement. So in the futures market, you'll find it hard to squeeze a few $100 out of a move on the US indices, unless you go obviously bigger contract sizes, which obviously you can do. You can load it up, but when the market opens, obviously we can make $200 in seconds. So it just doesn't make sense to try and squeeze a few $100 out of hopefully a rally on the DAX on the US indices when you can just wait for the US Open and squeeze it out in 5 seconds. Doesn't make any sense. Some people do trade Globex, and I've tried, and I've done okay with it. But typically, if you look at your P&L long term, you will identify that the Globex session is when you'll take a lot of loss. You've got to basically, a little bit similar to this strategy, you've got to use a wide stop because it is going to muck about up and down a lot because there's not a lot of liquidity in the market. And you'll find that the risk reward because of the size of the stop doesn't help. It just makes it very hard to squeeze money out. Doable. But, look how long it's taking to make $500 this morning. Yeah. I made $800 or whatever that last trade was in 10 minutes yesterday afternoon. I've been talking for couple of hours and I'm $500 up here. It's so hard to squeeze cash out. It's no point. But you can. Let's just quickly see what's going on with this CAD. Oh, it was weeklies being hit on the CAD, not dailies. So Canadian dollar looks like it's weakening. Yeah, Canadian dollar's weakening. So everything's rallying against the CAD. Bit of drawdown control done on that one, pound CAD. Very weak. Does my Forex funds also have 30% profit limit? No. That's why I use my Forex funds. They don't have a consistency rule. Some firms do, some firms don't. Check the rules. In futures, it's more prevalent in futures. But there are some prop firms in CFDs that also do that. Aussie US ADR, so the Aussie dollar. This US dollar is getting hammered, I think. Yeah, as well. Yeah, US dollar's still coming down. Good. It's more prevalent in futures because it's so easy to make thousands in minutes on the futures market. So, you know, they put that in place to stop you having that lucky day. Literally, you could go into the futures market at the open and you could flip a coin and go 2 contracts long on the NASDAQ or 2 contracts short on the NASDAQ, and you would have your target hit by the end of the day on a trend day. So weekly range, US dollar Swiss, we're now 225 on the weekly range. So that's maximum weekly range. Don't go any further than that because it's 1% of the time we go beyond that. Just, just doesn't happen very often. 225% of its weekly range is just shot. You can see it's embedded on the RSI. So yeah, so like on a day like yesterday in the Dow, so that's your open on the Dow. There, yeah. So if you took an ORB short on the Dow yesterday with 2 contracts, that's I got in short those. So those trades you just saw that I took were here. That candle, I broke even. I could have had all of that, but I couldn't. Yeah, that was $1,400. That would have been 4.5K. That would have been probably 7K. Your target's 6K. My target's 6K. 1 trade, 2 contracts, done. Yeah, that's why they don't let you do it. But when you get your account, you can have these lucky ones. It's not luck, is it? It's logic, yeah? It's the ORB strategy. This is what we're trading. This is why I built the EA. It's the ORB strategy. When you get a trend day, you make a fortune. When you get a rotation day, you get stuffed. We're on a trend day at the moment. Yeah, so, you know, this thing is just sitting here at the moment, potentially going to make me $1,200 on a trend day. I mean, this is not a big account and it's small risk. So, but that's $1,200. Pounds, actually. This is a pound account, not a dollar account. You know, just read the rules. All of them, read the rules, always. I don't see an alert in the menu. No, it's not part of the indicators. Right click, trading, alert. It's part of MT4. Nothing to do with anything. It's bog standard MT4 functionality alerts. They're all down here, look, in your journal. Got an alert tab. So if I put an alert there, here's down here. And I can adjust what sound to use. I can adjust how long it lasts, how many times it rings. Delete it from there, disappears. So it's all empty. It's just standard MT4. With own money, you don't have a frame of any loss. Yeah. This is the thing with, you know, it's a double-edged sword, trading. And people ask me all the time, what's the minimum balance for the EA? If you're worried about what the minimum balance is to trade with an EA, you can't trade. Yeah. If you're worried about losing that money, don't do it. 95% plus of people that put their money into a brokerage account lose 90% of it within 90 days. Yeah. But that's because they use a stop loss. The brokers know this, the prop firms know this. If you put an order in the market that says, when we get to this level, take my money away, the market will do that. That's what it does. You've told it to do it. You read the contract with your broker. There is a line or a section in your broker contract that you have signed that says you give them authorization to execute the orders that you place in the market at any price they deem fit and accessible to them, right? So at the swap, if they want to spread the market by 1 ADR to execute your stop loss, they will, because you signed a contract to allow them to do that. You told them, please execute my stop loss at 1 ADR spread at midnight when I'm asleep and the market's closed. All right. It's all rigged against you. If you trade in the way that everybody teaches you to trade, obviously. Thanks, you're using Top Step Trader on Top Step, yeah. I do use Jigsaw as well. So that's just TS Trader, obviously. Peter, so you don't basket trade with ADR reversal? You can do, yeah. Yeah, but ADR reversals are the same thing. It's an entry. Or position trading is position trading. How you get into your positions is entirely up to you. So as a position trader, the difference between you and a normal trader is you take a trade in a direction and that's it, you're in. And then you wait and see what happens. And if it goes against you, you change your entry price to suit and wait for the market to go your way. And if it goes against you, you do the same thing and you wait. A normal stop loss trader will get in, place an order in the market to lose money. The market will move up and lose the money. And then they will place another order with another order in the market to lose the money. Yeah. How you get into the market, Aussie US 150 ADR, how you get into the market to enter your first trade in a position is entirely up to you. So if you want to use ADR to take your first entry, fine. If you want to use RSI, fine. If you want to use support resistance, fine. Doesn't matter how you enter the market in a position. You get in how you get in. In the bootcamp, I give you the strategies that I use to enter my positions. You can use those. You can use anything. You can position trade any strategy you like. You could use Bollinger Bands. Go and stick some Bollinger Bands on here on the hourly chart. And when it gets outside a Bollinger Band, take a trade. That's your first entry. If it keeps going up, take another one. That's your position. Sure. Position trading is long or short. I am positioned long. I am positioned short. The reason for getting into the market, irrelevant. Ask your dog, right, which parent they like the best. You go and stand at one end of the room, get your other half to go and stand at the other end of the room, and both of you, when the dog's in the middle, shout its name. If it goes to you, go long. If it goes to your other half, go short. The odds of you winning that position are the same, 50-50. It will either go up when you press the button or down. If you get in on ADR, get in on ADR. If you get in on RSI, get in on RSI. If you get in on the hourly, get in on the hourly. If you get in on the 4 hourly, get in on the 4 hourly. Whatever you do, though, wait for whichever condition you want, i.e. long or short, to be triggered by the market. That's the big thing that I will never take a trade without, is a reversal alert, because this tells you that the market is moving in the direction you are expecting it to, because the condition that you've entered on is an extension. It's an ADR extension. It's an RSI extension. It's an extension up to a previous level that was reactive. Yeah. It's outside of the Bollinger Band, but don't get in because it's outside of the Bollinger Band. Get in because it's outside of the Bollinger Band and the market is reversing. Reverse alert. This is why the EA is called the Market Reversal Alerts EA. The whole purpose of it is to only trigger when the market is going in our direction, because if you haven't got these guys on your side and this thing's going up parabolic, we don't want to go selling it just because it's going up. If it's hit 150 ADR, that's 125 ADR, for example, that's not a reason to get in. That is a condition in the market. But the reason it's at 125 ADR is because they've been buying the crap out of it. Wait for some sellers to come in to tell you that, okay, we might be over, then get in the market. So it doesn't matter how you get in. If you want to use a stop, obviously, but you know what will happen if you use a stop. If something goes parabolic, 150 ADR, and you've entered at 100 ADR, you're stopped. If you enter at 125 and it goes up to 150, you're stopped. If you enter at 100 and put your stop at 175 ADR, you might wiggle around and then drop and be fine. But then you might push up, wiggle around, and then push up the next day and stop. Yeah? So it doesn't matter how you get in. I give 4 strategies in the bootcamp. 3 of them are mean reversion, 1 of them is hedging. Pick one. Doesn't matter. Yeah, look at the dashboards at the moment, right? Whether you've picked ADR as your entry, you've got all those opportunities today. If you pick the weekly ranges, you've got all those opportunities this week. If you picked 4-hour RSI extensions, you've got all of those opportunities. If you've picked 1-hour RSI extensions, you've got all of those opportunities. Doesn't matter. Pick one. Or both, or all. But don't overexpose yourself. If you get an ADR hit and you get in, don't get in the next day because it's a hit RSI. You're already in. You're in a position. Your exposure on the instrument is long or short. Your exposure on the currency. In this case, I am short the Australian dollar. I am long the Canadian dollar because I am short Aussie CAD. So I'm wanting the Aussie dollar to go down and I'm wanting the Canadian dollar to go up. Because if the Canadian dollar goes up, it forces this down. So my exposure, and this is what some people seem to have a problem understanding, is when you go into a trade short on something, you are shorting the base currency and longing the cross. If you go long on something, you are longing the base currency and shorting the cross. Your exposure when you trade on one instrument is exposed on 2 currencies all the time. So that's why we have exposure in the Trade Manager dash. So it shows us what our current exposure is. So we want the US dollar today to have a massive rally. Why? Because we've got long exposure. We'd like the Canadian dollar to have a rally as well and the Swiss franc to drop. Tells us what we want to happen in the market. So we can use that to plan against news. But why you get in is up to you. To say there's nothing. I've done it in here before in the past. I've got people to call out a pair, a time frame, and tell me whether to go long or short. And I've just literally gone into the time frame on that pair, hit the button, come back in the afternoon for the afternoon session, and see how the trade's gone. If it's gone up, we close it out and we go, there you go, well done. You've developed a new system. If it's gone down against us, enter another trade, and then we'll have a look at it tomorrow morning. But the reason for getting in was 2 people picking a completely random instrument and time frame. The odds are the same. It's 50-50. Just try and put the odds in your favor by identifying a condition that repeats itself. That's all you can do. But you will never time it right. Because timing is not down to you, it's down to the market. And the market will not repeat the same conditions over and over again all the time, exactly the same. We can't. That's the reason we position trade, because you can't get the entry right. Remember day 1 on the bootcamp? Yeah. What are the things that as a trader you fail at? One of them is always trying to pick the top and the bottom. You're always trying to pick the top and the bottom because you always want to get the biggest part of the trade. You can't, because you're not in control of when the market turns. So stop trying to control that and just get in. Anyway. But the reason I show the systems that I trade is because these are the ones I've been using for years and years and years. And I just know these work fairly well most of the time. I'm pretty sure there's a lot that could be improved on them. But, you know, I've spent a long time developing systems and strategies, and you find after a while, you get the same result with everything. If I find a load of stop loss based strategies that have a really good strike rate, I always find that out of sample, they don't quite do as well as they did. I always find that the position trading strategies, if I decide to change to a different RSI or use, I've tested with the CCI, I've tested with the ADX, I've tested with all sorts of stuff. It's all gives you, at the end of the day, roughly the same result. So if you stop trying to be exact, you will find everything just becomes so much more relaxed and easy to do. So use the stochastic if you want. I found that way too fast, but sometimes it was amazing. Stochastic. If you get a range bound month on the stochastics, you make a fortune. But when it goes parabolic, you'll be in way before everybody else. Everybody else will be getting in here on a parabolic move. You'll be in there because stochastic got you in faster than everything else. Everything's got a plus side and a downside. The RSI's got many downsides. It's also got lots of upsides. None of the indicators can do what we want, predict the future, because they all tell you what's happened in the past. But you've got to use something to tell you what's going on in the market. Yeah. So, you know, no right or wrong on anything. There is just what it is. It is what it is. The market is what it is. What's your approach to determining lot size when managing drawdown? Well, the lot size is calculated based on, the EA calculates lot size based on half an ADR's movement and risking 0.25%. So when I get into a trade, so when I'm in a trade like that one, it will basically go, we want to go long. So put a stop half an ADR away. Yeah. And I want to risk 0.25% or whatever you want, 0.1, 0.25, whatever you want to risk on that half an ADR's movement. So it places the trade based on the stop loss, then it removes the stop. The calculation is exactly the same. The risk is tiny though, because obviously I have no idea if it's going to work or not. So I want to risk a tiny amount to try it. Your first entry into the market is always a toe in the water. Yeah. So here, let's have a look and see if we can get CAD yen going our way. No? Okay. Let's have another go. Going to work? I don't know yet. We haven't gone anywhere, but if that works, brilliant. If you dip your toe in the water, the worst thing you can do is pull your toe out and dip your toe back in again. Yeah. If you jump in with both feet and risk 1%, by the time it's down here, you're going to be crippled in pain. Yeah. Think of it like a game of Russian roulette. You got a revolver with 6 bullets, 6 barrels, chambers, and you got 1 bullet in there. Yeah. Your risk is that 1 bullet is wrong. That 1 chamber is wrong. If you risk everything on that 1 chamber and it's wrong, you're dead. If you have 1 bullet in there instead of all 6, i.e. we can take a trade, get it wrong, take a trade, we get another shot. It goes down. We get another shot. It goes down. We get another shot. Right, now it's a 50-50, isn't it? But it's not, is it? Because there's still 6 chambers and we're still spinning it and there's still only 1 bullet. So your odds are 1 in 6 every time you pull that trigger. But if you get in with a tiny amount and you're wrong, it's a tiny problem. And if you can't predict whether this is going to go up or down, why not make it a tiny problem, not a massive problem? You're going to make money. I was using the ADR with stops yesterday, but with stops and CAD Swiss hammered me. Couldn't trade after the news. Yeah. So yeah, let's look at CAD Swiss yesterday. Yeah. So ADR is 47. So that was your ADR yesterday. Yeah. So your first reverse alert was there. Use a stop, stopped out. Then it rallied. You were like, oh, for God's sake, stop me out. And then it pushed up into profit. So you think, right, I'll get in again. Stopped out. Screw you, I'm getting in again. Stopped out. Screw you, I'm getting in again. Stopped out. Screw you, I'm getting in again. Stopped out. I'm getting in again. Stopped out. I'm in it. Still in it. Do you know what I mean? Does it mean that trade is wrong? Any of these trades, they were all probably right. They will all be right. At some point, the market will be up here. I can say that with 99% certainty. At some point, from where you entered yesterday, this market will be up there. You just trying to time it. You can't time it because you're not in control of which way it goes. The banks are. You're trying to control an uncontrollable thing. Every time you put an order in the market that says, get me out with a loss there, you are basically telling the market to come and take your order. This is why we have this on the website. What was that yesterday? What were we looking at? CAD Swiss. CAD Swiss. %99 of the market right now, today, are long on the Canadian dollar Swiss franc. 99% of the market, retail, is longing this thing. If they have pressed the long button, where is their stop loss? Lower than price. If you are a bank or institution that needs to find liquidity to fill your commercial orders, to fill CAD Swiss commercial orders today, and you need liquidity, where are you going to find it? Where do you think the market will take the CAD Swiss today? Yeah. Where do you think they did it yesterday? Why is everybody long on it? Because it's come down. We've got to buy it. No, it's come down. Because the Canadian dollar, the markets don't like the Canadian dollar movement, so they've dropped it. Well, it's going to go up again. No, they've dropped it because they don't like it. It's like the old Northern Rock example, isn't it? Yeah. Northern Rock share price drops, so buy it. No, it's dropping because they're going bankrupt. Well, I'll buy it then. No, it's going bankrupt. No, I'll buy it because it's really, really cheap. No, zero. Bankrupt. Oh, I've lost all my money. Yeah, we told you it's coming down. We do it though because human beings think that things are cheap. There is no such thing as cheap in the Forex market. It's an exchange rate. There's no value to it. It's just a difference in price, an exchange rate. It doesn't become cheap or expensive, not like a stock. The RSI is a stock indicator. Yeah. Look at the CAD Swiss today. Coming down. Why? Because Peter longed it there and his stop was there. So they came and got his liquidity. And then Peter saw it go up. So he put his stop under there. So they came down and took his liquidity. And then we got a push up. So Peter longed it, put his stop. I'm not picking on you, Peter. I'm just using your example because you brought it up. Retail longed it. So they put a stop under there. So the market came down and took the stop. Why? Because they've got orders to fill. It's because Microsoft have phoned up and said, we need to change a load of Canadian dollars into Swiss franc today. Okay, brilliant. What price do you want? I don't care. Just get the orders executed today, 25 million. All right, brilliant. We need some liquidity to execute CAD Swiss, guys. Right, brilliant. Okay, well, it looks like all the limit orders are down there. Stops are down there. Okay, well, let's go and get it. As long as you keep putting the liquidity in there for the market will keep taking the liquidity. Because every time they take the liquidity, they make money. Banks make money. Their job is to take liquidity. You are a liquidity provider. Stop providing liquidity, you will not have your liquidity taken away from you. Simple. But that obviously comes with inherent problems. Drawdown. Can you explain the reversal EA, please? No. Go to the website. It's all explained here. Yeah. That video there is 2.5 hours long. There's absolutely nothing that isn't covered in that video. Go and watch that. If I wanted to explain it to you now, it would take 2.5 hours. The reason I recorded the video is so I don't have to do this every time somebody asks about the EA. Go and watch the video. There's videos in here explaining about the market reverse alerts indicator, which the EA is based on. Some stop loss based strategies there to use. How to install it. Settings. There's some examples here of the EA strategies that I trade here every day. in action, so you can see it working basically. So all it does is it's the back tester just showing you and explaining the strategies and how they work, why they work, what they're doing. Everything you need on the website, it's all there. What percentage of the time do you think an opening range strategy is successful? My backtesting is suggesting less than half. It's a breakout strategy. Yeah, remember what I just said about breakout and trend strategies. What's their strike rate? If the market spends 80% of its time in rotation and mean reversion, what do you think the strike rate of a breakout strategy is? Low, 20-30%. But when you get the breakout, the reward is vast. Yeah. So you have to find a mean in there of, I'm not, you know, a way to get in. So today, for example, you saw exactly what I've done today. I'm still in it. Yeah, but I'm in it with a trailing stop because this is broken. So this is a breakout. Look, this is what it's called, the opening range breakout EA. We've broken out of our opening range. On a trend day, it will make money, but you will only get 2 to 3 trend days a week, sometimes less. And again, this is what I say with prop. If you start a prop evaluation on week 1, when the market goes into trend 4 times this week, we've had, look at the DAX this week, gone up, non-stop, gone up. Look at 2 weeks ago, down, solid. Go back a few weeks before that. Weeks it's spent going sideways. So you start an evaluation on week 1, happy days. You start phase 2, week 2, happy days. Week 3 goes into rotation. Your funded account is blown. Anything wrong with the strategy? Nothing wrong with the strategy. What's wrong? The market conditions. Can you predict market conditions? No, because we can't predict the future. Which way is it going to break today? Not a clue. Let's go either way, both ways. I hedge myself a lot because I have no idea where it's going. But what I'm going to do is let these play out. Yeah, I'm going to trail it because I'm happy to lock in the money that I've got there. But you know, at some point, this is going to come back down. They're going to profit take this move. So if this goes up to 100 ADR today, I'm going to make 100 ADR worth of money. If it doesn't, I won't. Do you know what I mean? There is nothing. There's no setting. I got asked the other day in Telegram, which is the best set file for the opening range breakout EA? There isn't one. They all are. They all work some days. They all don't work other days. What's the strike rate going to be? Which week? Which month? Which year? I don't know. And is what happened 2 weeks ago the same as this week? Everybody's looking for an answer that doesn't exist. This is the hunt for the Holy Grail. Yeah, this is the website. You know, this is the video on the website that is on my list. This document up here, where is it? Position Trading Handbook. If you go and get the Position Trading Handbook, that gives you the order to watch all the content I've ever produced. And this is very high up the list. Where's it gone? Where's the Holy Grail gone? Oh, there it is. Why are you system hopping? Yeah. This is what everybody's looking for. The system or the strategy that works consistently, that I can become a consistently profitable trader with. Doesn't exist. Because there's nothing that can predict future market movement or future market regime, condition, range, trend, breakout, not breakout. There's nothing that can predict it. So you hop from one system to a system to system to system, looking for it, and you'll never find it. Which is the best settings for the market reverse alert CA? Don't know. Try that one. That didn't work very well. Try that one. That wouldn't work. Try that. Yeah, it's the same. You get into the same cycle with EAs. Opening range breakout EA. I'm going to try the 5-minute pre-market. Wow, I passed prop. Oh, it failed. Okay, I'm going to try the 15-minute pre-market. I passed. Oh, it failed. I'm going to try the 5-minute this time because those two were too volatile. Oh, it passed. Oh, it failed. They all worked, didn't they? They all failed because every day is different. Yeah. So get in, get out, and accept it. Just accept what the market gives you. You are not going to get paid the same amount of money every day. You're going to get paid 20%, 0.2% some days. You're going to lose 1% some days. You're going to make 3.7. You're going to make 10% other days. You're going to get paid what you get paid because the market moves as the market moves. You're not controlling the market. It's controlling you. But your strike rate is going to be different every day and every week. This week, I mean, I don't even know what is a strike rate as well. You know, your strike rate, people ask me what the strike rate of the market reversal alerts indicator is. And it's very difficult to explain that it's impossible to explain. Yeah. What is the strike rate of that? To answer the question, you have to understand what a strike rate is. And that's what I think most people miss. A strike rate is whether or not a trade was successful. This isn't a trade. This is a signal. So if you placed your order there with your stop loss there, and the next move was that, the strike rate is -1. If you placed your order there with your stop loss there, and the market did that, your strike rate is +1. The strike rate has nothing to do with the market reverse alerts indicator. The strike rate has to do with where you place the order to make your losses. Because most of the time when you get a market reverse alert, if that one doesn't work, the next one will. So if you'd have taken the second one and not the first one, that changes your strike rate. Whether you took the 5-minute version or the 15-minute version changes your strike rate. Strike rate's got nothing to do with indicators. Strike rate's got everything to do with where you place your stop loss, because if you take that next long with your stop there and it does that, your strike rate is a loss. If you'd have placed it here, it's a win. That is the first thing that affects strike rate, obviously. The second thing that affects it is where did you put your TP? So if you got in there with your stop loss under there and it did that, and your TP was there and then it did that, it's a win. If your TP was there and it did that and then that, it's a loss. That indicator did a really good job. The strike rate was based on you being greedy or not being greedy. Nothing to do with indicators, strike rate. What's the strike rate of the opening range breakout? Depends where you put your stop. Today, if you took the 15-minute post-market breakout and you put your stop there, it's a winner. If you'd have taken the 15-minute pre-market and you hadn't have taken profit there because your profit target was there, it was a loss. If your profit target was there, it was a win. Your strike rate's different. It's the same indicator, same EA, the same strategy. The strike rate is not based on anything but whether or not that is a successful trade. Go with a 0.5 R and you'll have a totally different strike rate to a 0.7 R. Indicators the same, strategy is the same, expert advisor is the same. Result totally different. Now, if you take both of those strategies, let's say, for example, you go with a 1.5 R on the 15-minute pre-market breakout with the ORB EA, and then you go with a 2 R, you will find over a period of a year, both of them will be profitable. One of them will have a strike rate of 35%. The other one will have a strike rate of 39%. Which one are you going to go for? The 39. Next year, the 39% strike rate had a 27% strike rate. The 35% strike rate had a 62% strike rate. But you picked the wrong one because the year's different, the data's different, the market conditions are different. You can't do anything about it. Just trade it. Yeah. As long as you can prove a long-term edge in the past, you have half a chance of making money in the future. That's all you can do as a trader, is look at the past for clues, which is why I use what I use. Oops, wrong one. Because I know that in the past, when this thing gets down here, it goes up. That's it. Literally. Simple as that. I haven't got a clue when. Nice looking break today on the DAX. $1,000. Pound, rather. I made a couple of £100 yesterday. I was in a loss actually at the end of yesterday, and I took a couple of trades with the Price Action Toolkit yesterday. I managed to get some profit back yesterday. I can't remember where they were, but ended yesterday up £200. I was down £77 or something. And that was all ORB. So I took 4 trades yesterday. I took a trade on the NASDAQ, the S&P, the Dow, and the DAX. Ended up with £77 loss on 4 trades. We had some really good breakouts yesterday. You know, we had some amazing breakouts yesterday, but the settings I used yesterday weren't quite right for that particular breakout condition because it pulled back a little bit too far and stopped me out before it went. If I'd have had a slightly wider stop, I'd have made a lot more money. But if I'd have known that I needed a slightly wider stop, I would have done it. But then I can't predict the future. You know, you can't do it, can you? If you stop trying, you will just get into trades and you'll let them run. And, you know, this thing is just running. I've no idea when it's going to stop. It's either going to get my TP and I'm going to bank $700 or $607 pound on that one. And then I'm going to let the other one run. Or it's going to hit that, stop me out on that one, or it's going to stop me out on both of them in a minute without hitting that one. I don't know. Sorry, we've gone off analysis today. I haven't really got time to do the analysis anymore, but, you know, I'm only doing the analysis on all of this stuff because everything's stretched. So, you know, go and pick one. Doesn't matter what you get into today. That's okay. I deserve it. Learned the lesson. Yeah. I wasn't having a go at you, Peter, about that. I was just using your name because you came up with it. Could have been anybody. It is everybody. It's everybody's. You're not alone. Everybody puts stops in the market and gets them taken out. Part of trading. I do it. I'm doing it now. Look, this order here. We came up with the new terminology for this, didn't we? It's not a stop loss. It's a stop profit. Why? Because I'm massively in profit. If this now comes down here and takes me out and then rallies 200 ADR, what's this order done? Stopped my profit. Because if I didn't have that stop profit order in, I would have made a lot more. I put an order in the market to tell the market to take me out. The market will do exactly as I'm asking. It will take me out at that level. Whether that is the right decision or wrong decision, I have no clue. But it stops whatever happens next from me being part of that process, doesn't it? Yeah. How many times have you been stopped out before the market rallies? Were you right? Yes. Why were you wrong? Because of the order you placed in the market to say, if you decide to sell for a little bit, I don't want to be on board before you push. When you think about it that way, you know, it makes total sense. I use them. I get stopped out. I went down to -3% yesterday. Got 2% today so far. Cool. There you go. So Nicholas is just, you know, prime example. You lose 3% one day. You make 2% the next day. We've got the New York session still to go today. Plenty of time. You might make another 3% today. You might lose that 2% and then lose 2% on top of that today. But the choice will be down to what the market does when you press the button, not you. Yeah. You can set a strategy and a system up, but at the end of the day, when you press the button, there's a 50-50 chance of the next candle being in your direction or against your direction. And what you do after that candle paints is entirely up to you or your system or strategies, not the market. What's your opinion on pound US dollar? I haven't got one at the moment. US dollar's coming down like crazy, so I would buy it. Sorry, US dollar's going down like crazy at the moment, so I would sell it because it's obviously massively extended. So I've got 2 shorts on at the moment. We'll be adding another short on. We've got a resistance coming up by the looks of things. What is this level? Why have I drawn that line? I think that's probably from another chart. That's not a level. So yeah, it's rallying like crazy at the moment. It's extended on the 4 hour. Again, you know, I can give you my analysis. My analysis tells me that when we get extended, we pull back. Yeah, market structure means lows, highs, higher lows, higher highs, higher lows. So I'm basically trading to the higher low. You could wait for an accumulation and take a break long. Or you could wait for an accumulation and take a break short. You. But I'm short at the moment just because that's what I am. You know, and again, I'm short. I don't know whether this is going up or down, obviously, but I'm short. So my current situation is I am positioned short. Whether I want to be or not, I don't really want to be short at the moment, to be honest, because this US dollar is really collapsing and I'm worried it might collapse for a week or so. I'm hoping we get some positive news this afternoon that might help us undo this. But if we get some negative news this afternoon, I really don't want to be short. But I am short, and my system tells me that I should be getting short. Who knows? It's the US dollar. Anything can happen. Facts, man, take what the market gave you. Yeah. I have to say 80% or higher strike rate for me to add to my playbook. Well, you won't find one, Silent. There is no strategy that's got an 80% strike rate. And if you need to add an 80% plus strike rate to your strategy, to your playbook, I would say if you've got a playbook that works already, just carry on doing what you're doing. You are. I mean, I don't know. I say there's no 80% plus strike rates. I've been trading for 15 years. I've never found one. I can produce a strategy with an 80% strike rate. I've done it. It only takes 4 trades a year, though. Very easily, I can produce a strategy with an 80% strike rate. 87%, I've got a strategy that produces an 87% strike rate on the daily charts. But it will trade 2 or 3 times a year. Guess what indicator it uses? On the bottom of my chart. Go back and look in time and see if you can find a time where you've ever seen either a 5 or a 95 on the RSI. Go and look at how many times, if you'd have taken a trade at those levels, you were successful. If you want to pay your mortgage off, that's probably the way to do it. But it's not consistent and it's historical. I've no idea what would happen if we hit it again, but go and have a look. You won't find very many instances in the past. Look at that drop there. You see that? That's Liz Truss destroying the UK economy. And that's Bailey bailing out the UK economy. That is a 7. Gives you an idea how often that system triggers an entry. 87% of the time, with a stop based on an ADR level, you will be successful. Greed is good. Greed is when traders losing money. Yeah, greed is good. Greed is good. If you can hold greed is a really bad thing in trading, but it's also a very good thing in trading, because if you don't hold on to your winners, some of your winners, you won't make money. Look at today. The only reason I'm in £1,000 of profit here is because I'm holding on to the winner. The winner, hold it. But my mortgage costs X per month. That's nearly my mortgage. You've also got to be realistic. What's my account size? I trade, well, my personal account is over 30K. My prop funding varies wildly from week to week, from month to month. So does my earnings. Are you still testing the ORB EA, as I'm thinking of buying it at the end of the month? No, the ORB EA is finished, done, dusted, up there, working. The ORB EA is what you're seeing here. This works absolutely fine. The new version, if you like, or this alternate version, I'm calling it ORB ADR, I'm testing still and developing. This is a bit of a longer term project. If I do put it out there, it will be a separate thing. It's not the opening range breakout. It's going to be it shouldn't be called the ORB. Actually, it's wrong terminology. It's basically an index scalping toolkit, if you like. So it uses the ORB. It also uses price action and other methodologies, if you like the 1.5 hour session limits, that sort of stuff. There's I'm building something basically to try and replicate myself, but ORB is just part of it. It's more of a tool to try and make money. So the main focus of this version of the ORB isn't to get the right opening range break. That's part of it, statistically looking at what is better than others. But what the underlying main logic in this EA is, when a trade closes, are we in profit for the day? That's the main logic. Forget about the amount. If it's 50 or 5,000, when a trade closes, is one of those conditions true? Yes, stop. That's its logic. It takes multiple strategies I know that work and tries to enhance those and use those to achieve that goal. So that's basically what it's doing. Because the problem with every strategy out there and every system out there is the person normally. So you have a good run, like somebody just said, I lost 3% yesterday. I've made 2% today, right? What should that person be doing right now? Stopping. You've made 2% today. That's a big win, right? But what will that person do now? Don't know. If they carry on trading, there's a jeopardy of them losing that 2% and creating another -3. Yeah. So from my testing, when doing in-depth testing on the ORB EA and other things, it's not the system or the strategy. It's whether or not you end up in a profit, as to whether you make money. Because I've witnessed the ORB EA make a fortune, but because of the rules set, lose that fortune. Yeah. So for example, on the opening range breakout, if you use the continuous mode, and this is one of the things that really sparked this research, was ADR on New Zealand dollar yen 125, 125 on that push. Missed her out too soon. Where I got out. This is one of the things that really sparked the research, was this continuous mode. So with the ORB EA, you have the option to use continuous mode. So that range there, for example, we take that break. Whatever happens on this trade, whether it be a plus or a minus, when it closes back inside that range, it resets those orders to take another break, because we assume that that didn't work. So we try again. And if that happens, we get on it. So we need to get on it after. If you set the target in the ORB EA high, like 20,000, what it will do is it will just trade all the time if the conditions are right until the time you tell it to stop trading. And what I've seen in the backtester is this thing lose, reset, win a massive amount, paying for all of that loss, moving back down into here, taking a break, losing, stop trading, New York session, fly. So it turned what was a $350 win, because it was a breakout win. So we were paid for those two, and we got a win there which was bigger than those two, ended up $350. We wanted to make $1,000, we didn't quite make it. But what it actually ended up doing here was losing $3.5K. If it had stopped there, more often than not, more days than not, these massive losing days would not outweigh the total sum of all these tiny little wins. And the days it goes like it's gone today and doesn't stop, I've stopped out now, look. Out of that. Okay. So days like that, stop. Yeah, because they all outweigh these other days. So what I'm trying to do is develop remove the continuous mode type thing, but what's the best pre-market range to take? Why? Historically. If those conditions are not right, don't take them. Then what should we do? Well, we'll wait for the open and we'll see what the open's like. Oh my God, the open was absolutely huge. Those days, we tend to find it's not very good. So don't take it. Then wait for an inside bar. But the inside bar can't be on the initial range because we know that the initial range was absolutely huge. That's why we didn't take it. So you can't take that first inside bar because the likelihood is we're going to rotation. So ignore that candle. And then we'll start looking from here to see if we can find an inside bar break. If we find one, yes, off we go. Tick. Yeah. So I'm trying to replicate what I would do as a trader because the ORB EA at the moment is a blunt instrument. You set rules, it trades your rules. But in the real world, if I saw a stupidly tight range like that, I'd be saying probably not going to be a good one today because there's a high probability of a whipsaw, which is a 2-hour loss within literally minutes. So let's give that a skip for the minute and see what happens next. That's what I'm thinking as a trader, replicating myself. So that's what I'm building, is something that is a little bit more intelligent than just this is the strategy, because the strategy isn't going to be working every day. So some days I might see no opportunity and not take a trade because it looks crap, and I'll go, well, I'll just wait for the NASDAQ. So that's what this version is doing, but its core is not trade a strategy because a strategy setup appears. It's trade until you've made money. Your job is to make money, isn't it? What you make is not your choice. What you make is the market's choice. As long as you make something, most days, you will come out profitable. And the equity curve won't be pretty, but it will be probably more consistent moving forward, more likely to replicate it, because we're using historical logic that says these don't work most of the time. Today, it was a fantastic. Yeah, if you took that one today, you couldn't have helped but make a 1.5-hour return. You had no choice. You had to make a profit today if you took that. But most of the time, there's a higher than 60% loss rate on them. So I'd rather not take them because I know the odds are not in my favor. If it's 50, fine. 55, fine. As long as I'm using a positive R, then I'm going to make money, aren't I? But if it doesn't work, step back, wait, analyze. Yeah, that's what I don't think anybody does with EAs. You know, that's what I'm trying to do, is to build. What would I do in this situation? When this happens, what would I do? That sort of thing. That's kind of what I'm trying to build. And then, you know, if it happens on the first trade, done. If it happens on the 5th trade, done. Yeah, are you getting into profit? That's what your job is, isn't it? We're all trying to build systems and strategies about what's the best way to. Doesn't matter what the best way is to. What matters is, can you get that 0 to a plus? Yes, done. Stop. What do you need to make a month? Yeah, today I've just made £1,000. £1,000. 3/4 of my mortgage. I've just been sitting here talking. Yeah, let it do it when it does it. When it doesn't do it, just admit I'm not going to make £1,000 today. If I can squeeze 300, brilliant. If I can squeeze £1,000 out today and 350 or 500 out tomorrow, that's my mortgage done. So the next day, if I can squeeze out 600, that's my car payment done. Next day, if I can squeeze out, yeah, that's the way you got to look at it. If you want to make consistent profit, stop shooting for these 15% months. Take what the market allows you to have on the day, but do it in an intelligent way. If you're in a rotation day, we can identify that. If we've gone into rotation for an hour, we're in rotation. So let's try a sell at the high with a tight stop and a small target. Did that work? Yes. Stop. Yeah, so that's what I'm building. So this is not the ORB. So the ORB EA is the ORB EA. That works fine. Yeah, but it is mechanical. So, you know, it will do what it does. Today it would have done whatever you did. If you took the 5-minute, the 15-minute pre-market, you won. If you took the 5-minute ORB, you won. If you took the 15-minute post-market ORB, you won. There was no losing scenario today with the opening range breakout EA. So it's just, you know, but that's today. There you go. So anyway, that's what I'm building, but it's not going to be a quick thing. US dollar seems like it's dying. Yeah, it is at the moment. But then when you look at something like the US dollar CAD, yeah, we're still inside bar on the news. Look, we haven't broken the low of the news yet. On the US dollar CAD, US dollar Swiss, obviously, the Swiss franc is still on the march. And the yen is stalled. So it's not. Don't forget, we've got news, yeah? Look at what causes the drops. News. We've got news this afternoon. This could all go completely back the other way this afternoon. Not our choice, is it? Is there any logic in what distance trailing stop loss should have, or just a random decision in the ORB? So I eyeball it. Again, with the ORB EA, you will use a percentage of the opening range, or you use a fixed pips. I eyeball it. So the stop loss that I put on today, I eyeballed what roughly the market is moving. So, you know, look at that candle. That's probably the biggest candle we've had in that run. So if I put my trailing stop like that and it pulls back that far and then continues, I'm safe. No logic. If you put it that far, you'll probably get stopped out quicker, won't you? I mean, today was lovely. There was, I mean, that's, as far as pullbacks go, that was your biggest pullback today there. But I mean, there's no logic to it, really. It's rough, you know, not too tight, not too loose. Again, some days you'll go small, some days you'll go big. Some days you'll wish you'd have gone bigger than others. Some days you'll wish you'd have gone smaller than others. Most of the time, when I put a trading stop on something, it literally stops out the next candle. Because I've put an order in the market. Basically, when you place a trading stop, if you place a trading stop, what you're saying is, I'm happy with my profit. So the market will go, all right. If you're not happy with the profit, don't use a trading stop. The reason I put a trading stop on there was because I had a grand. Over 2% gain. 2 and a bit percent gain on the account. Stop. That's why the trading went on. Didn't go on there because I thought it was right. I put it there because I did not want to lose the money. Protect it. It's your capital. You can't trade without the capital. Most important thing you got to keep hold of. Henricus, tell your secret how you make profit in funded account. I've done that. I do that every day. It's not a secret. I've just told you exactly how you make money on a prop account. You buy a load of them. The ones you pass, you make money on. The ones you don't, you lose. It's an equation. It's a business, right? A business outlay is $500. If I want to buy a proper valuation for 100K, it costs me $500. If I buy 10 of those, it costs me $5,000. So let's say I buy 10 of those a month at $5,000. 3 of them, I get funded. Okay. 1 of them fails. 2 of them succeed. The one that goes over 5K, I stop, wait for payday, and withdraw it. The other one, whatever happens, is profit. Reset. When you get paid, you start trading the funded again. You will either have a lucky run and make a load of money, or you will have an unlucky run and lose. It's all profit from here, isn't it? I've spent 5K. Out of those 10 accounts, I managed to get 2 of them to actually a point where they actually made money. As long as I make more than 5K, I'm a profitable prop trader. Not rocket science. It's not a secret. It's a business. They're in business to take your evaluation money. You're in business to take profit out of their evaluation money. My Forex funds make $22 million a month in evaluation fees. They use that money to pay the people who manage to get a funded account up above the threshold to take a payment out. Whatever's left after the evaluations and the payouts is their profit. That's their business model. Your business model is to try and get some of their profit. It's not a secret. It's very straightforward. And you fail a lot. I fail a lot. I pass a lot. Yeah, look at this account. This account's been running for, I don't know. 7th of May. Oh, no, sorry, the 5th of July. It's an American. 5th of July. This account's been running for 8 days, 5 trading days. And I'm up $772. My target is $2,880. I'm up $700 in 5 days. Why? Because the market hasn't been very good. 1,000 of that was done today, as you just seen. Literally just seen it. Will this pass? I haven't got a clue. Not down to me, is it? So if this afternoon, right, 2 things are going to happen this afternoon, okay? I've got to do $2,800. So I'm 2,100 pounds. Sorry, this is a pound account. 2,100 pounds away from passing. So this afternoon, let's say it is now 220 or just, 230. We're looking at this afternoon, right? That's the opening range. If this afternoon the market goes vroom, 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 like that, yeah, I will pass this valuation. If this afternoon the market does that, and that, I won't pass the evaluation. If it does that, I'll lose 3% of my account. And I come out with a minus 1% day because I've made 2% this morning. That's what will happen. I don't know whether that will happen. I don't know which of those scenarios is going to happen this afternoon. You know what I mean? If you have 10 of these, right, you don't trade all 10 at the same time. If you started one today, you are up $1,000 today of your 2,800 target. So you're up over 1/3 of your target today. If you started it 5 days ago, 5 trading days ago, like I did, you're only up 700. See the difference? See how this works? Because I started this on the 5th of July, I'm up $700. If I'd have started this today, I'd be up $1,000. Nothing to do with the strategy, the system, or anything. It's just the conditions the market has done on the days that I've traded, on the instruments I choose to trade, which are different. Yeah. Some days I'll only trade this and this. Some days I might, this afternoon, if we get massive news this afternoon and this market goes like that, right? I'm not going to trade these 3 indices this afternoon because I've just made $1,000 this morning. I'm not going to jeopardize that on a condition in the market, which I know quite often makes it go whippy. I'm not going to do it. Yeah. So whether I make that decision this afternoon to trade these 3 or not is also going to have an impact on whether I pass or fail. See how many variables there are and how ridiculous it is to try and find a system or strategy that fits all these variables to make you long-term profitable. Isn't possible. There's too many variables, too many things changing. You have to literally accept whatever you get given. All you've got to do is find something that's got half a chance of working long-term. ORB, position trade, it all works, but it doesn't always work all the time. Not a secret. I'm just explaining what this thing is that you're looking at now. It's a completely random load of green and black candles that I have no control over. That's what it is. And if you want to make money out of it, you have to press one of the buttons and hope. Literally hope. There's a video I put up yesterday, which Tom Hugard shared, called Flawed. which is all about the Chicago Mercantile Exchange and the history of it and how it went from manual trading in the pits over to electronic trading. And it interviews loads of the guys that were in the pits, traders. Really fascinating video. There's one of the guys in there about 3/4 of the way in. He says, you'd walk into the pit in the morning and you'd gamble long or you'd gamble short. And he gets asked, what do you mean gamble? He says, well, it's gambling, isn't it? We're walking into something with a load of money and we're basically saying, I hope it goes up or I hope it goes down. These are the guys that ran the Chicago Mercantile pits, the most successful stock traders in the world, admitting they're gamblers. Because it goes up and down. You can't walk into the Chicago Mercantile Exchange and go and look at a board and go, well, that's going to go up today. They had no clue. Not a clue. The only reason they were successful is because when they got in, they knew they needed to get out when they had some money. And when they had enough money, they would walk away and take that money. And they know that they've got to pay for the days when they're going to lose, which means you've got to let your winners run and cut your losses short. This is what this does. Yeah. My risk was here. My entry was here. My reward was there. That is bigger than that. Therefore, the strategy works. Whether or not I get more of them this week than those will determine whether I make money this week. This doesn't make money. How this works and moves on a daily basis is whether or not I get paid. So when you're looking for a prop strategy, pick one, anyone, doesn't matter. As long as it's got a decent strike rate and it works sometimes, you will make some money. That's it. You just got to stick with it. Stop this. Watch this video. Stop this. This is why you're not making money in the markets, because you spent the last however many years you've been looking into trading doing this. You're trying to find the holy. It doesn't exist. There isn't one. US dollar Swiss, pip away from a monthly low. Probably not now, is it? I've been waffling too much. Pound CAD, pound Swiss, pound US dollar, all ADR. Pounds going mental. Or been mental. Yeah, so pounds rallying. There you go, look, this morning, like an hour ago, I was sitting in drawdown. Now I'm sitting in profit. I have no idea which way it's going to go. What are we looking at? US dollar Swiss. Monthly low. US dollar Swiss, pip away from monthly low. Where are you seeing a monthly low, Michael? Is it a really old one? There's no monthly low there, not that I can see. Call the new EA Lee AI clone. Yeah, I'm going to come up with a really fancy name for it, which is going to be completely non-descriptive and mean absolutely nothing, which will bamboozle people. I don't want to call it anything particularly clever. It's basically bloke that trades making money, EA. I don't know. Nicholas was minus 0.7, now minus 1%. So I stopped, yeah. And I look at EC, yeah. I got to go in a minute. Nearly 11 o'clock. It's been a waffle session this morning. Always good waffle sessions. EuroCAD, yes, still pushing. I was obviously still short on it. So ADR today is that high there. So we went into balance for 3 weeks. Price discovery failed. We came back into balance for another week. Price discovery kind of went into another balance. This is all kind of the same area, and then dropped out into balance, and now we're back. So, I mean, I've watched this area at ADR. If that fails, 200 ADR. That fails. Help. But I mean, it's extended on the 4. We were extended on the hourly, which is why I'm in it, but it obviously came out of extension here. So that's where I got in, and all we did was an accumulation, then the news. So, this is the news. This is again position trading. This is the downside to it. When you are on the wrong side of a news event, there's nothing you can do. You are short. I'm short this pair. The Canadian dollar has weakened off the back of its interest rates and its flow. So there's nothing I can do. I've got to hold it and manage the trade. I know that it will come back down. I've just now got to hold on to it and hope it's not too long. But all you can do is look at levels that you think make logical sense. That level, they didn't want to go beyond that level last time. And when we came back and tried to go above it there, they didn't like it. Whether or not that holds or not, I have no clue. It'll be a 50-50 shot when you get there. But we know lots of times it has in the past. So maybe will, maybe won't. Which prop firm do I use? My Forex funds, and I use E8 as well. I also use Take Profit Trader and Top Step. I'm just trying again for futures, but I don't trade futures very much. I dip in and out of futures when there's an offer on, basically. I find futures very hit and miss. Although I have to say, since I've been trading ORB on futures, I've been a lot more successful. So I'm manually trading the opening range breakout strategies on the futures market. But I'm one shot, one kill, in, out, done, walk away with whatever I get. Or whatever the market tells me I can have. Like Top Step, tell me I can't bank more than, if I want to pass the evaluation, I can't bank more than about $1,000 a day. So on evaluation, obviously. So, but like I say, it's a game with prop. You've got to have more than one pie, fingering more than one pie, basically. I'm also, because I trade support resistance a lot in prop. It's very hit and miss support resistance, as we know. Yeah. So, but what I find with my prop trading with support resistance bounces, so basically just using the market reverse alerts indicator. I don't use the EA. Just using the indicator to signal at levels of support resistance, or placing pendings. I still do place some pendings, and I have to say some of those work far better than the indicator. Sometimes they don't. Again, there's nothing that works right or wrong all the time. But I say with that, I tend to pass faster on prop with support resistance plays than I do with the opening range breakout EA. Because the opening range breakout EA does make a lot of money when it makes its runs, but it also has lots of periods of stagnation, whereas support resistance works a lot, but it takes a lot of time to get those entries. So I find myself sitting here trying to find a trade. Right now, there's no support resistance on this, and I'll flick through the charts and I'll find there's no support resistance levels coming up. I haven't done it yet today, but it's difficult to pick a strategy. But when you understand it's all about risk reward on prop with stop losses, it's all about risk reward, and it's not about getting those massive ones. It's about getting the wins. Yeah. So 1.5 hour, I'm always at break even, or I've taken it off at 1.5 hour. Anything I get as a runner is bunts, basically. And the bunts sometimes is what the target is. So just, get the wins, keep the strike rate up, strike rate up. That's the important thing. And to do that, you've got to use small targets within ADR if you can. Yeah. So if I take a support, this is a good example, actually, that line. So you can see that line I've just drawn on the orange one here. Yeah, if we zoom in. So look at this here. So that's actually is perfect. Look, it's ADR. Yeah, so that orange line is pretty much ADR. So you put a half an ADR stop loss on that support resistance bounce when you get a signal. Look at where you've got to get to make a profit. From entry somewhere around there, stop above 150 ADR, so half an ADR of stop. To get a 1.5 R on it, that's all you've got to do. Literally, from there, move down to there. Look at where ADR is. I've just got to get just over half an ADR. It's basically 3/4 of an ADR, isn't it? That's all you need. The market spends 58% of its time moving up and down within ADR. If you can target 3/4 of an ADR, you're going to hit it a lot if you get the entry sort of right. But if you're going to go for the 4 hours, yeah, this thing's got to move down multiple ADR. It's going to take days and days and days. Again, up to you, totally up to you, but it's all about risk reward when you're using a stop loss. We know that. I mean, that's what they teach you. Trading 101. You always have a positive R. Yeah, that hasn't changed and it never will change. If you're going to use a stop loss, you've got to target more than your stop loss to make money. Can't do it any other way. You're not using a stop loss, it doesn't matter. You just get out when the market gives you an exit. So solution in fund account, trade index, as you're showing. Yeah. Or what I've just explained there. Yeah, up to you. Like I said, there's no right or wrongs, is there? Coming down quite hard on the market now. So that was a perfect exit today. I got out somewhere around there. Watch for, we're going to go to rotation at the highs. Watch for a bounce down there if we get there, but I don't know we will. Markets seem to be coming down quite hard. Dow's coming down quite hard at the moment. Oops. Big strong drop on the Dow. Sorry, monthly range, Michael. Oh, okay. Sorry. Yeah, you meant US dollar Swiss is almost going to hit its monthly. Yeah. So just okay. So we're sitting at 388 off of a 390 on my broker for US dollar Swiss. So we're about to hit the monthly range on US dollar Swiss. So where's the start of the month? There. So that is basically we're on the 12th of the month, 13th of the month. That is what the market on the US dollar Swiss normally does in an entire month on average. So we're about a third of the way into the month, and we've already done the entire movement that we typically tend to do, which tells you what? Again, all these are market condition indicators. ADR, RSI, weekly, monthly ranges, they're condition indicators. They're telling you the condition of the market is stretched beyond the norm. When we get stretched, elastic band theory says we tend to get a snapback. That's all the condition indicators are telling you is we're stretched. Doesn't mean it's going to go back that way. It means we're stretched. That's it. We know we're stretched, so there's an opportunity. So you have to look at the opportunity and go, right, do I fancy that? And if you do fancy it, get in with a little trade and see if it works. 125 on the Aussie dollar, US dollar, or was that Aussie dollar CAD? Aussie dollar CAD. 125 ADR. Again, beautiful trend. Look. That'll be the first structure break today, though. Look. So didn't get one there. Didn't get one there. Didn't get one there. Had one there, but you weren't at ADR. So this will be your first reversal alert at ADR, above ADR on the Aussie dollar CAD today. If you get that one, obviously, you might not get it. Might go up. It's 200 ADR for all we know. We've no idea, have we? Were you using prop at all and not an overseas broker with very high leverage? You don't need high leverage, do you? Trade with. the difference between risking your money with a risk and risking your money with, if I had a 1 to 30 leverage or a 1 to 500 leverage, I can still get the same amount of money on the table for every trade. You're only taking one trade at a time. The idea of prop is being able to get hold of $100,000 worth of money for $500. Getting that power, that punching power. Yeah. So when you're trading a 100K account, yeah, you have 10% of drawdown. So what you're actually trading is a 10K account. So I am buying for $500, $10,000 worth of money to use in drawdown. That would be 100% of my account. So it's going to cost me $500 to trade 100% of a 10K account. If I had 10K and I put it in there, I can lose all that 10K. Why not risk 500 to do that? There's no point in using your own money to do that. If you want to over leverage to that amount, then you're just gambling. Obviously, as we just said, everything is gambling, but it's like these people, like Mission FX sells his course on compounding. He tells you to risk 5% per trade. Just been talking about this morning. What happens if you get 5 trades go wrong in a row? You lost 25%. You've lost $2.5 grand of your 10K. Nuts. Doesn't work. Leverage and access to funds are totally different things. Do you do a 2-step or 1-step? 2-step. Or 1-step, depending on, with futures, it's 1-step. But with futures, your danger level is 3 times higher. So therefore, you've got to be much more disciplined. One of the reasons I like I used to trade with TopStep. TopStep was the very first firm I ever got funded with. When they used to do Forex. They don't do it anymore. They only do futures now. They used to do Forex. I used to trade with TopStep. They were the first funded company that I dealt with and the first company I got funded with. Ever since they kind of led the way, they've been cloned and replicated, and there's so many different variations on prop now that you can basically pick any condition you like, pretty much. But they've just changed their business model and their evaluation model to be a 1-step process with a fixed daily trailing drawdown and a stop out rule, which means that if you hit your maximum daily loss, they don't fail the account. And that is the big seller for me, because the thing that kills everybody is the daily drawdown. And what happens is, if you in futures, you tend to have a trailing drawdown that goes with your P&L. So if you run your account up by 2K and then drop it by 2K, you fail. With TopStep, if you run it up by 2K and drop it by 2K, you're back to where you started, right? But if you start and you drop it by 2K, they stop you trading for the day. They don't blow your account. You can come back tomorrow and carry on, but it's like a idiot, not a got to pay again. That's a big plus, because 90% of the fails that I've ever had, more than that, I would say, probably 98% of the fails that I've had on prop have been caused by over leveraging and hitting the daily drawdown, because you're going for that big win. They don't do that. So it's a really good program now. But I'm confused by the payout methods, because you can, when you get funded, you pick lots of different accounts now, which wasn't the case when I was funded with them. So I'm just going to see if I get it over the line. I'll see what it's like. But I've been stopped out once. So I'm sitting at the moment in $1,400 in profit on that account. But the first day I hit the 2,000 daily drawdown. First day. So my P&L is not pretty at all. Look at my P&L. Day one. That's my profit curve. I just screwed day one. Loss, 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 loss. Finished. day one, stop trading, come back tomorrow, Lee. All right, very sorry, Mr. Top Step. That's what I've done since that stupid day. So if you look at what I've actually done, I've made $3,400 in profit in... How many days have I been trading? Where's the days? Doesn't tell you the days, is it? I don't know, however many days I've been trading. But I've made $3,400, yeah? Strike rate, 65%, all good. Not over leveraged, only taken 48 trades and 96 contracts, maximum 1/2 contracts per trade. Yeah, so, you know, all good, all going the right way. But that is what you do in futures. It will catch you out. It will catch you offside so fast because it moves so fast. You know, the difference between grabbing $100, $200, $400 here and losing 500, 500, 500, 500. Literally on the ORB, it's like lost 200, lost 200, lost 200, lost 200. You're $1,000 down because you've got to trade a single contract. Unless you go micros, but micros is boring. Micros takes too long. Anyway, right. Do you use two-step? I'll answer that. I understand, but if you use 500 euros for the account, then funding a broker with a leverage of 200 gives you the same buying power. No, you've got 500 euros. I don't think you understand the difference between leverage and buying power. Different things. It's different. I mean, you could do, yeah, but your risk reward, right? If you put $500 or 500 euros or whatever into an account, and you want to risk the same as if you were trading a 100K account, you would have to go in with something like 5% per trade. Again, I don't know if A1, if you've been in Mission FX's group, but this is the crap that he teaches. Yeah. Over leveraging. Yeah. I could take $500. I could gamble 5% of it to try and double my account up to 10K. I could do, but I will blow it because that is irresponsible. If I trade 0.5% proper risk on a 100K account, it's proper trading. Yeah, it's not, that's gambling. That's just, I can take $500 today and flip it into $1,000. No problem at all. On a 500 to 1 leverage account. I would also possibly lose it all today because I'd be over leveraged on it. But my point is to be able to withdraw £5,000, right? Let's say I want to draw $5,000 out of a prop account. To be able to do that, what I need to do is spend $500, trade for a few weeks, get hold of a funded account, and get a few decent ORBs for 2 or 3 days. Yeah. And I'll have a $5,000 account. To take my $500, I've got to 10x. I've got to 10x that account. 10 times. I have to grow it 10 times. Right? On a hard prop account, I'm only looking to grab an 800, an 8% growth. You know, it's psychologically, it just doesn't work. This is why compounding doesn't work. Psychologically, it breaks you. You could always replicate the same maths with anything, but if you go with that sort of mentality on it, you're just going to go down a path which is going to blow you up eventually. We've all been there, you know, over leveraging. Very easy to do. I've done it by accident many times and made a lot of money by accident. But when you make a lot of money by accident, you suddenly realize that I could have lost a lot of money by accident at the same time. And I have lost a lot of money by accident as well. Very easy to fat finger the button. Yeah. I've been into the market with a 0.1 and accidentally put a 1. And all of a sudden it's like, why am I suddenly $70 in loss? Oh, that's the commission. Tick, tick, out. Easy to do. I'm with Alpha Capital. Yeah, Alpha's good. Aussie dollar yen, 125. Big moves on the Aussie dollar, big moves on the yens. Again, Mr. Out too soon. See, look, that was the reversal alert we were talking about earlier, yeah? That was the reversal alert there. If you do use a stop loss, you would have been stopped out there. If you'd used a wide stop loss, you'd have been stopped out there. If you hadn't used a stop loss at all, you just made money. You see that? Yeah. Couldn't work out whether my head was in the way or not. Right, I'm going to leave it there because it's 11:15. I'm back on at 2:20. I need to actually do some other stuff, like have a shower, because I just got back from the gym, streamed, and I haven't even had a shower yet. Yeah, so just keep your eyes peeled on all of these. 1:30 this afternoon for the news, PPI and unemployment claims. So potential for the US dollar to have a complete undoing of yesterday's move, or a complete hell and a squeeze. So we'll see what happens there. The market is very extended on the US, so we may even find that we get negatives on this and it doesn't actually do a lot. So see what happens. But there's a lot of movement potentially this afternoon at 1:30. It might not go anywhere. We'll see. But bear in mind, obviously, 1:30, we have got news. If you've got P&L with profit in it, you might want to take it ahead of the news just to make sure you've got it in your bank. Henricus, 10,000 account, 1 to 100 drawdown, 1 to 100 leverage, drawdown 5% per day. How big position will you open? I don't know. You need to calculate it. How big a position you would open would be based on your stop loss. Your risk on that trade. Yeah. Nothing to do. That question can't be answered. Risk. Your lot size is based on the risk from your entry to your stop loss. Whether you keep that stop loss in place or remove it, the calculation to make that lot size is based on movement and price, yeah, and risk. So if you want to risk 0.5% on half an ADR, the lot size will be whatever it will be. If you want to risk 1% on half an ADR, same distance, but risk twice as much, the lot size will be twice as big. Or you could make the stop twice as big, yeah, and risk the same amount. If you want a calculator, go in the Telegram group. There's an indicator in there called I haven't got it on here. There's loads of lot size calculators out there, though. Market reverse alerts EA does it automatically for you. This is why I use it. Lot size calculation is complex. Depends on the currency. Depends on all sorts of stuff. So, but yeah, small. The more you risk, the more you make. The less you risk, the less you make. That's literally it. So, if you want to keep the account longer, risk less. If you want to go aggressive and pass this afternoon, risk more. Like I said, I've passed evaluations in a day. So, Jerry, thanks. Going to sleep. Yeah, you have been listening for a long time. 11:15, people. We have covered a lot today, though, so all good. Right, I'll be back this afternoon, 2:20. Anything you need, let me know. I'll be in Telegram. Otherwise, I'll be back this afternoon, 2:20 for the US session. I'll be back tomorrow morning for the Frankfurt session at 7:50 usual time. Good luck today with the news. Hopefully it's a good one. And I'll be back later. So have a good day.